type of morning we want to see. In terms of catalysts, for today specifically, 2 o'clock J-Pow speaks. Hope that makes you happy. Yes. See how you said some people were arguing sub 3,000. You thought they were high. I still think they're high. I think they need a little bit more geopolitical help. They got a little bit. Let me shoot you the, this is the mix. Squish face. Marco Corolla. Marco Corolla. Did the music going home stream? No. Like, I don't want to run the risk of the music switching over to something that's copyrighted. Yeah. Yep. 360 apparently was the magnet. Now, here's the interesting question. So far this year, our closing low has been 3666. I'm not making that up. Okay? 3666. I hope it stays that low, mainly because years from now, we do want to admit 3666 sounds pretty fucking cool. Also, if you consider, wasn't our closing low back in the Great Financial Crisis 1666? Your caffeine 3580 low. When was that? I assume that was an intraday low because the 3666 number is what I see as closing lows. So you think the target low now is 290. Our target is 300-ish. Low is 290. Interesting. Good luck. Yeah, the intraday low was 360, and then it bounced, yep, and ended at 3666. Yep. No, Seeking Waifu, we're still above, actually, COVID lows. Let me show you. You can see, basically, the COVID lows were over in, like, the 227s, 228s. Yeah, that's where we are. COVID was more violent. COVID was also a little bit more justified. You see the Dow chart? Sure. No, that's not it. Fuck it. What is where I can specifically... Not Dow. What's the Dow? Is it Pat DJ? What's the Dow ticker specifically? Finviz has a specific ticker for the Dow, which sucks. It's the one thing I'm not a fan of, Finviz. Yeah, IWM died during COVID, which makes sense. Small caps. You still think it's the best short? I mean, at some point. DG, no, I tried that one. It's covered call ETF. So I don't know if, I don't think this is it. DIA? I think, yeah, okay, DIA is it. Thank you. Yeah, so you can see the Dow, we're still well above. Tesla and SPY puts, anything would be printed. Listen, there's not a lot of puts that wouldn't print today, all right? Yeah. Yeah. It's at pre-pandemic levels. What, the Dow? Yeah, we're at pre-pandemic. Yeah, we're right about at pre-pandemic levels, yes. Yeah. Which is funny because our earnings are not at pre-pandemic levels. Yeah, Margie, never trust you. We'll talk about what happened this morning. Oh, savage. Savagery. Yeah, it's not like we had something to predict this market. I know. I know. Reddit swap. The recession is coming. We don't need chips in cars and data centers anymore, which is a good thing because apparently, according to Honda, they still can't get fucking chips for their cars. Yeah. Imagine this. Ford was very specific. Their excess costs associated with supply chains was not semiconductors. Nope. It was other components. Honda raises their hand this morning, cuts production targets. Why? Semiconductors. Yep, savagery right here, my friends. Hold you, I'll hold you. I'll hold you. Listen, if you're coming for copium, you're not going to find it today. I told you 2 days ago, post FOMC, I was shocked we were not down more. Unfortunately, it looks like we caught up today. For kind of a stupid reason. Not stupid as in unjustified. Stupid as in, what the fuck is England thinking? Right? England. Yes. What's happening today? Bank of England set in motion. Not even the Bank of England. Fuck it. The entire English government. Did you guys hear this shit? Did you hear this shit? Not even Europe. Let's blame the UK. Yeah, remember, Brexit. You can't shit on the EU for this one. You can shit on the limeys. His Majesty, fuckface himself. Yes. Margie says, well, isn't UK inflation over 10%? Yup. So Margie, if you knew inflation was over 10% and still growing, what would you do? Huh? Oh, see, Dizzle, that pound's getting cheaper by the moment. Frugal is exactly right, by the way, but the big dick strength of the USD, that's what's causing it. Every central bank needs to defend their currency. Isn't there currently a short? Yep, and that's causing it. Chill on them zeroing the tax on the alcohol, looking out for the little guy. Yep. No, ChemLife, you're right. It's not just England, but boy, England set the stage this morning hardcore. So, for those of you that didn't catch it this morning, England inflation still high. And what do you do in times of high inflation? Well, if you're the UK, you fucking cut taxes. Yep. This is not monetary policy, my friends. This is fiscal policy. UK said, you know what? We need to cut some taxes. Yeah, fiscal. Inflation's going up. Great time to cut taxes. All right? Yeah, let's look at it. Look at it. Look at it. People like, what the fuck did they say? No, they couldn't have. What the fuck did they say? Were we sure? What the fuck did they say? That's the shape. Look at this. This is the Great British Pound versus the US dollar today. All right? Again. Wait, they're going to do what? No, they can't be. That's a Wait, what? Well, I guess maybe... Wait, what? That's what we're watching in real time. Yeah, totally wrecked. Settings are fab. We're already in a recession, though. Yeah! And inflation's a bitch. That is insane. Do tax cuts protect jobs, or is that just a talking point? Depends. How often does a currency chart look like a dead body? That's a good question. What I do want to point out here, to give you a perspective, because we always look at a lot of charts, and we'll see charts with big up and down moves. So let's move out for a second to show you the size of this move. This is not the US. This is not our currency. Our currency did not wake up and decide to go roughly 7 to 8% stronger. No, that wasn't us. That's the UK. Prometheum, your argument is absolutely correct, more than just on the energy side. That's the general whole like transitory argument. I am pretty sure that's what Jeremy Siegel's been bitching about all morning on a halftime report, and I can't wait to see that clip. Hey Spencer, how you doing? Devil Horse, yes. I think you're kind of missing the point, my friend. The pound is doing this, but as you correctly are pointing out, it's a lot less on the euro to US dollar. Okay. UK was down over 3.5%. The euro is only down in about 1.5. It's much more. This is much more being driven by the UK. Yeah. Yep, Frugal. How will central banks defend their USD peg? They shouldn't. Here's the fun. And Frugal, you're getting to the interesting point. Guys. We talk about what's going to cause a Fed pivot. At a certain point, the breakdown of the Treasury market is a much more like... We always talk about the Fed being of two mandates, right? Take notice, walk. What the fuck? Can we start calling the British pound the British ounce? Fucker. It's funny. We talk about the Fed bank having two mandates. Technically, there's a third mandate. All right. Now, the two mandates we know about: price stability, full employment. All right. Full employment, we are so far in the good side on that. We already know our bank's turned into a, quote, single bank mandate. There's a third mandate. J-Powell's called this out numerous times. It just doesn't matter because it's never really come up until starting to come up now. Bond market functioning. You need a liquid market. Liquid. He doesn't care if the bond market goes up or down. He cares that there's participants. At a certain point, there is questions. And this is not my point, by the way. Lynn Alden from Twitter made this point where she basically says, at a certain point, the drying up of U.S. Treasuries, and you kind of heard a little bit of a hint, very small though, during FOMC, J-Powell was asked about selling MBSs. And he said, fuck no, we're not selling MBSs. Okay? He was kind of aggressively about, no, we're not selling MBSs. And people kind of realize that's because the market can't really absorb them. Well, at a certain point, if the market gets so dried up, they're not going to roll off. Oh. Yeah. I still think nothing's changed from the U.S. perspective, but we need to... there's an interesting Twitter post. I did forward it on my Twitter account that I thought was brilliant. Someone pointed out, we need to replace the term... J-Powell's going to hike until something breaks. We need to change that to J-Powell's going to hike until something American breaks, because we're starting to break a lot of other countries. Yep, correct, Come Life. You don't have many buyers of the U.S. Treasury when every government is selling them to defend their currency. Yeah. This is not about fighting the Fed. At least this is not about Americans fighting the Fed. At a certain point, this is about other central banks fighting the Fed. And the Fed can't get as much done unless they're really comfortable driving the full economy into, like, really bad recession. Chem Life, check out the CS chart. Oh, man, you are a glutton for punishment, sir. And oh, shit. I had puts on these guys at one point. I actually made money on puts, and I was sitting there thinking, like, let me show you. Okay. I remember I played puts. There was all sorts of shit about them getting in trouble. And I was like, European bank, say no more, fam. I fucking hate it already. I'm biased against it. You all know that. So I remember I got like $10 puts. And I think I played it somewhere around here. I walked out with like 20%, something small. Boy. Margie, really good question here. Why does selling U.S. Treasuries help their currency? I'm going to tell you something it's a really good question. And it's a fascinating one. I want to talk to you about bananas. Margie, let's chat. It's a really good question. Why does selling U.S. Treasuries help their currency? There's this cool economic theory. There's papers written about it. Wendy, you probably know about this. Green bananas, yellow bananas. A U.S. Treasury and a U.S. dollar are two things, or rather, are two sides of the same thing. They're both bananas. One's just a ripe banana, i.e. dollars. A Treasury is a green banana. You can't use it yet, but it's $1. Okay? Stay with me. So, if you are a country like Hong Kong, you need to defend, you have a pegged currency. For every dollar, I think, it used to be, I think, like 11 Hong Kong dollars, something like that. So what ends up happening is this. Calls on banana. Fuck off. So what ends up happening is this, okay? You want to keep your currency pegged to the US dollar. So for every time you do exports or imports, you have to buy or sell US dollars. In order to keep the accounts kind of balanced, you are then buying or selling treasuries, usually buying treasuries. Then when your currency starts getting pressured and you need to maintain that peg, by selling the treasuries, you're selling them for US dollars. You're then using those dollars to buy your own currency to defend your currency. That's what Japan does. That's what Hong Kong's going to do. That's what other countries used to do basically during the Asian financial crisis as well. But the step one is sell US treasuries, earn US dollars. Right? Does that make sense? It's a really good question, Margie. Really good question. But for a lot of countries which hold US treasuries, those are IOUs for US dollars. And right now, everybody wants US dollars. And I want to make sure everyone understands this is the most fucked up time period from like an economic standpoint. Because in all these times of high inflation, the US dollar is the best fucking asset in the world. Yeah. No one saw that coming. Wasn't it a few months ago, you guys heard a lot of people talking about the currency, the basket of commodities, or the yuan, or the ruble, or a combination of them with the Indian rupee, or this basket of other currencies was going to replace the US dollar? You ain't hearing that a lot right now, are you? Yeah. Jordy, how many currencies are pegged and how many are free floating? I don't know. I will point out, you used the word peg. You know, and if you want to get real technical, there's some countries don't do like true pegs. They don't do hardcore pegging. They'll do like range pegged. So they'll basically say market forces can push like the bot between like a certain level. Margie says the dollar milkshake theory seems to be, yep. I take your milkshake. The US dollar. Bitcoin and cryptos too. Take notice. I love you guys are fucking savage on bad days. I do want to point that out. I appreciate that. Bitcoin and crypto still at the mercy. By the way, because it's fucking Friday. Come on. Orange juice was the winner. Orange juice was good. Other than that, how's gold and silver doing? Oh, not well. Not well. They are not hedges to anything but wealth. I change my stream title all the time. Yeah. Try to get more specific. Why didn't you freaking tell us to buy calls on our... I don't know. Who needs vitamin C when today we're all taking that vitamin D? I may buy some air shares, no joke. I am going to buy something today. All right. I am going to buy something today. I am going to buy relatively light risk. I'm not buying options today. I'm not. I'm buying shares. I'm buying shares. I'm buying shit that I know. Windmaster, I will never take that bet. Nope. Even though I want to. Windmaster says, bet you gold and silver outperform the US dollar in 2023. My true belief is Gold and silver can trade flat. No fucking way is the US dollar trading up in 2023. Oh, God. Cream of Sun guys. So sorry, my friend. Shares? Fucking... I know. You bought Qualcomm Leaps hoping for a bounce. Didn't someone mention there was a big options order for December, $110 calls for Qualcomm. I don't know if that's true. But yeah, I want to do some light buying today. Shares. Yep. But the reason why is because, hey, you're supposed to buy when it's uncomfortable. And I gotta admit, pretty fucking uncomfortable. Yep, Qualcomm's got a divvy. Yep. Chat cat, what we got here? This is CNBC. Okay, here we go. Hold on, guys. We need to watch this. This has been making the rounds, apparently.
A.m. until I got my Dexcom G6.
The alerts are a godsend. I adjusted my treatment and now I sleep better.
I've had some scary lows in the past. Now I feel like I've got this.
Professor Jeremy Siegel of the Wharton School. He joins us right now. Professor, it's good to see you again. What are your thoughts as we watch these lows of June at least be taken out from the Dow standpoint, and maybe in the days ahead we find the other major averages in this same precarious place?
Yeah, certainly. You know, Scott, I find it very amusing. A year ago at that September meeting, when we had booming commodity prices, when housing prices rising at the fastest rate in post-war history, when we had all commodities going up at rapid rates, Fed Chairman Powell and the Fed said, we don't see any inflation. We see no need to raise interest rates in 2022. Now, when all those very same commodities and asset prices are going down, he sees, stubborn inflation that requires the Fed to stay tight all the way through 2023. Makes absolutely no sense to me whatsoever. Way too tight. We do not have to get anywhere near that level to stop inflation, because all the inflation is basically stopped. I mean, you had a headline just came across 3 minutes ago, oil back to January levels. That's before Russia invaded Ukraine. You can see what's happening to commodities. We're going to get the Case-Shiller index next week. It's going to show no increase or a decrease for the first time in years. And that's a lagged indicator. On the ground, commodity, all the prices are going down. The only thing that's not going down is wages. And by the way, wages are in catch-up mode. Don't argue they're pushing inflation. They're lagging inflation. I mean, the workers are trying to get what a little bit back of what the inflation happens to be. I think the Fed is just way too tight. They're making exactly the same mistake on the other side that they made a year ago.
There are those who agree with you, who think that the Fed is oversteering.
Yeah,
but saying it doesn't do anything for the scenario that we're currently in. If they continue to do it, whether you think it's right or wrong, if they continue to do it, what does it mean for stocks?
Well, until he sees the light and says, you know what, I don't think we have to be so tight. Until that happens, you can still have pressure on stocks. I mean, and that's going to, that's probably one of the factors that can see the light. I mean, when he sees how high real rates have gone, the dollar the highest in 20 or 30 years. By the way, next Tuesday, we're going to get the monthly stock market money supply data, which is going to show the greatest decline in 5 months that we've had in the post-war period. I mean, if he looks at any of the monetary or financial indicators, He can't say, oh, we have to keep them on. I mean, at his press conference, he said, we have to get real rates in the positive territory. They're in positive territory for every maturity.
I checked. That's true.
For the first time in years, we're already there. I thought that was the most uninformative. And no one was asking him a hard question. How do we have 3.2 million new workers and GDP going down? What does that mean? What does the record decline in the money supply mean? I mean, what does the collapse in commodity prices mean? What is the lag construction of these housing indicators that are 40% of the core inflation, which are going to filter through inflation for the next 12 to 15 months? Is that what he's looking at? Why is he looking at that? That's not an accurate view of what housing inflation is. I mean, there were no hard questions. There were 50 reporters there. I don't know. They basically said, repeat the statement you made at the beginning. There's so many things I ask him. What is he actually looking at? I mean, he's looking at 3-month annualized core inflation that is a lag. While we all look at market, look at what does the stock market do? It looks at market-oriented data. And that's what the Fed should be looking at.
I don't know that I've seen you this animated. You seem downright
I am very
angry
upset. Yes, I am. I'm afraid it's like a pendulum. They were way too easy, as I've told you and many others through 2020, 2021. And now, oh my God, we're going to be real tough guys until we crush the economy. I mean, that is just, to me, absolutely poor monetary policy would be an understatement.
Damn. Professor Siegel. They call him professor, by the way, because he's a professor of business over at NYU. And he's highly regarded, not in the way we are all highly regarded. Get my point? And by the way, seeing a bunch of people calling out, that was the only part of that clip, Chat Cat. Was there more? Is there another? Guy's only 45 years old. I don't think he's wrong. By the way, for all the people wanting to shit on him, he was calling out J-Powell for not raising rates a lot earlier. He was bearish before for a lot of people in VTards were ever bearish. Yes, DZ, I saw, yep, Jamie Dimon. Yeah, oh yeah. Clark Kent, super good question. We gonna find out. Yeah. He's at Wharton. Okay, got it. He was previous. I thought he was also NYU professor, but Wharton. All right. Yeah, I'm way off then. What's worse? Chung says yes. He's about to get, yeah. All he needed to add was, they know nothing. Right? That's what he needed to say. They know nothing. That's his Jim Cramer moment. I don't fully disagree. I don't. Fuck it. Fuck it. You guys saw the reaction. FOMC, I pointed out yesterday, when you look at their own economic projections, they will have seen inflation coming down and they will keep fucking raising rates. Yeah. Therein lies the problem. Not that, oh no, we don't need to raise. I don't care about cutting rates. We can keep rates higher. If a business doesn't make sense at 4% interest rates, it probably didn't make sense at 2%, and it probably shouldn't have made sense at 0%. I have no problem with that. But when you start seeing PCE going to like 4.5, and you're already at 4% Fed funds rate, and then you're talking about raising rates even more, raising rates again? No, that's fucking crazy. That's irresponsible. Straight up. Yeah, I like Margie's comment here. J-Pow is doing the right thing at the wrong time. Unless, keep in mind, guys, there is a greater possibility here. And this is bull copium. But this isn't even bull copium, quite frankly. If you're cheering for anything close, not the market, fuck the market. Bull and bear usually talks about the market. We are now talking about the economy. Remember, the economy is a little bit more important than the market. Okay? If you want a positive-looking economy, then call this hopium for you. Maybe Jay Powell and friends on the Fed, on the FOMC, are all trying to talk the market and talk interest rates in a direction. And you got to admit, if that's the case, they are very effective at it. Y'all seen what's been happening to bond yields? Ooh. Got to admit, it's been getting pretty fucking responsive. Look at the 10-year. We use the 10-year as an example. It's not even the best example, but we use the 10-year as the example. All right? September 13th. This is not the yield, this is the price. It's at 116. Already shaved off some points there. C-Dizzle, rates should never have been zero. I agree. 100%. 100%. Any business that their entire use case is predicated upon that type of rate shouldn't be a business. The UK 10-year is at that. They're fucking crazy. I think they have the wrong policy, period. Rad, do I think maybe Jay Powell and the Fed have info about potential stagflation and are trying to cause... No. Let me tell you why I don't. Half of the stagflation argument is predicated on inflation. You'd still have to see upward trend. And I can't, even their economic projections, they see inflation coming down. This is why I said 2 days ago and yesterday, I'm surprised we weren't lower off FOMC. FOMC is a wake-up call. It's a pivot point for lots of bulls. It should be. All right? There's two worlds, one before Wednesday and one after Wednesday. There's nothing Jay Powell said. It was these economic projections, which we covered. All right? They already see inflation coming down, and they don't give a shit. They're going to keep raising rates even when that's the case. By the way, Deutsche Bank made an interesting call out this morning. They're basically saying Bank of England needs to call an intermediate hike next week to restore any credibility they're going to have. Semis are fab. So why are they doing it? Either there's one of two arguments. Either A, they are that concerned about sending the message against letting the 70s style. Remember, the lesson from Volcker, which they've spoken about before, is the idea that 70s inflation got entrenched in forward expectations so much, partially because as soon as inflation went down, they, quote, pivoted and cut rates. And as a result, it stayed around. And therein lies the problems. So they could be saying one of two things. Either A, they're going to see inflation going down and they're going to keep double tapping it. Either A, they want to make sure that's not a problem. And then I will point out my bigger concern is they will spur deflation, say, end of next year into 2024, where we have some brutal demographic tailwinds that actually will encourage deflation already, mainly through COVID. Oh, Garfo, is that the case? The real yield is calculated by positive real yields. Full inflation. All right. Then maybe I'm wrong. Yeah. Either way. Yeah, I had seen a chart put up on FinTwit a few days ago that pointed out the entire yield curve was, quote, positive now. So I don't know where I saw it. But yeah, it could be right. But yeah, one of two things is happening. Either the Fed really wants to crush that 70s-style inflation expectations. Keep in mind, if you think that's the case, you have to acknowledge a few points. Number one, forward break-evens or projections on inflation, already the market doesn't think inflation lasts. They already think it breaks. And according to their own economic projections, they also think inflation breaks. They're still raising rates. Or number two, they're trying to shock the market, specifically shock the bond market. And if that's the case, congratulations. The problem is, now we talk about all the central banks defending their currency, and now all of a sudden this is having an interesting impact on the U.S. Treasury market. Prometheum, I'm with you. Fed reads, I think they can hit 4%, and that's fine. Now, remember, some of you guys are shitting on me for saying this. Last CPI print we got, that hot print was 0.1%. 0.1%. Measurement error on that was 0.1%. They were showing still massive uptick in housing and rent. All the leading indicating data is showing housing and rent going down, or at least plateauing. It's not going up. Tina's definitely not dead. The problem is Tina usually referred to U.S. equities. Tina now is the bond. Buy a bond. 2-year bonds. We should turn this into not J trading, bond trading. Then you guys can call me fucking old. The street is staring down a gun. Street's dead. It's been shot. The Fed's like, fuck it. I'm gonna shoot it again. Anya, if the Fed do turn out to just be acting, how will we be able to take what they say as credible going forward? I don't think we'll have a problem with that. Because if they're just acting, okay, then what that means is basically inflation dives in the next 2 or 3 months before they have to get to that crazy decision point, and they can just say, oh, no, we've always been data dependent in the past. Corporate bonds offering decent yields. UNH 5.3, Disney 5.5, Micron 5.5. Yeah. Garfo, Joseph Young, the Fed guy, okay, was on the Real Vision podcast. The possibility of the U.S. Treasury crash if countries start unloading and Treasury has to keep up their QT. Yeah. At some point, other countries are going to raise an interesting question here, which is, can the Fed basically even try to clear off their balance sheet if the other countries are now doing it? Disney at 5.5 sounds wonderful. Yeah. Yeah, Brad. Tina, there is no alternative. It used to mean the U.S. equities market. Tina used to be very specific towards U.S. equities. That's why when people say Tina is dead, it's like, no, I'm going to sit there and say from a very technical standpoint, no. The U.S. equities just isn't Tina, okay? It's the bond market now. It's the bond market. That's what's fucking crazy. Yeah, that's wild. So wild. That's what the SPY's doing. Even trying to show any balls. Listen, previous closing low was 3666. I hope we end above it because, again, I would love just the optics of having 666 be the low of this cycle. Right? Raising Keens. Almost like bonds are now a viable alternative to U.S. equities, a.k.a. Tina is dead. Or the real Tina was always the bonds. Yeah, because you used to say that the U.S. equities was, quote, Tina, mainly because of the idea, like, who the fuck's going to invest in bonds, right? You get 2%. Stock market does better. Well, now you're getting a lot more. Oh, straight perfection. That's so fucking cute. Well, let's not go there. The Fed listen thing. Nope, 45 minutes. That's going to be fun. Do you guys know if it's being broadcast? We can watch them. I'm perfectly happy with that. I do want to cover the China Xi thing because it's fascinating. Jay Drinziak, really good point here. For you, the strongest argument against rates, quote, higher for longer is that the current U.S. debt and deficits seem to not be sustainable for long with yields over 4% for longer. If you add the recession to that with lower tax yields, it gets even worse. Keep this in mind, though. Keep this in mind. First of all, you're exactly right. I've seen some people post some interesting piece of analysis on Twitter on this, and one of the interesting arguments I saw get thrown right back in their face is that if we all of a sudden spiked our interest rates to like 10%, it would take like many years for all of our bonds to roll over to that new 10%. It's not like we switch to 10% and then right now all of our debt gets kind of rescheduled to 10%. But it does get interesting. The stream title is the same as yesterday's. It shouldn't be. It should be Fuck It Friday. Does it say Fuck It Friday? Bulldog, which big companies are the first to fall? Sure, you tell me. Okay, then yeah, then I may have to reset it afterward. Yeah, I thought I changed it. Sorry, I thought I changed it. Oh well. Yeah, Bulldog, which big companies do you think will be falling? Roku. Is that a big company? Is it? Is it a big company? We gonna call that a big company? I guess it's kind of big, right? Spencer, I have no clue. Honestly, I have no fucking clue. Like, I'm buying Air, probably. Bunch of shares. Because they have earnings in 2 weeks. Fuck it. Netflix? Netflix is an interesting call out. Netflix should have a catalyst coming up soon, by the way. Like, what's been going on with their advertising sales expectations? Like, that's going to be really interesting. Because if Netflix ends up getting that 65 CPM, if they get that stock's going up. If they fail, that stock's going down. Netflix has a catalyst. You think Meta, you're super anti-Meta? So I hate the company, but like, you do know it's super profitable, right? Like, you know they make a lot of money, right? This isn't 2008. There isn't like, for like a company that's like free cash flow positive as fuck, like we don't yet have that crisis on the horizon that wipes them out. I mean, they suck. B-Hood, you think there's no way Netflix gets $65? Especially not in the current macro. They're out of the mind. We'll find out. Merlin, do we already talk about what happened to Air? What do you think happened to Air? Oh my God, they're down 10%. Yeah, I want to buy some. I mean, it's a small cap with a technology bent on a day in which the entire market's testing its lows. What did you think was going to happen? Rad, I saw a comment on Twitter that I fucking loved. Someone goes, kids who were 8 in 2008 are telling me this is just like 2008. Profitable but lost ad targeting impression share that Google now controls. They'll fall off with wasted investments and aging platforms. Don't they still have like $25 billion in free cash flow? Oh. Straight perfection. Funny story. Amazon Thursday night stream apparently set like a record for Amazon Prime subscriptions. I have not, that's about the yen. No, the yen hasn't mattered. The pound has kind of been a little bit more important, but I did speak about the yen yesterday. Hold on. I'm buying some Air because that's fucking hilarious. I'm just buying shares, though. Why I'm glad to have a lot of cash. There is no story air. It's a small cap. Is Jay the new Soros? Are you fucking Brits? No, I'm not fucking the Brits. You were 8 in 2008, and you can't tell you that it's like 2000 or the 1929 crash. Nice. See, dude, I'd sold off like things like my Pfizer, my Warner Brothers Discovery. I'd sold off like a lot of my bigger shares positions, like the last 2 weeks or so, to get myself into a cash position. But yeah. The stock that's actually the disappointing the most is GSK. I'm down like 16% on that. These are all shares. That's actually now, from a cash standpoint, my biggest. That and Twitter are still my biggest positions. Yeah. There's people born after 2000 watching this stream. And I accept you all. I accept you all. Trust me. But I will call it out. Like, if you weren't looking for a job in 2008, stop comparing this time period to 2008. Caliander, am I still waiting for Russia-Ukraine resolution to drop? Something like that, yeah. Dude, I dumped off Qualcomm shares a while back. Playing Qualcomm shares was actually really good. That's another one I should end up doing. You're at Lehman and their IBK. Oh, wow. Spicy. Yeah, Qualcomm's the other one. Qualcomm shares, I end up doing really well on. I actually bought somewhere around here, like 130. And I remember I got to sell them all. I actually did really well on those. You have a bounced expense. Oh, savage. All tea leaves. Here's the fun question. What do you think happens first? Putin gets kicked out, or those new troops hit the front line? That's the fun question. Oh, you got married in 2008. Well, congratulations, obviously. Talk about a financial downturn, man. Before getting yourself married, look deep into the eyes of the other person and ask yourself one question. Do you mind being financially destroyed by this person? That's Jay does relationship advice. Hey, Alex Camp, how you doing, my friend? First time chat. What do I think of Adobe at these levels? Oh, man. I don't know. They are overpaying like a motherfucker. Like, that Finga acquisition, I smell fear. It's probably a good acquisition. They're overpaying for it. Then again, I don't, like, how cheap do we need our software companies to be? I don't know. I mean, listen, I'm not playing Adobe. I'm going to go back to the Prometheum point, which is this. At a certain point, we have so many high quality companies that are trading cheap that if we're looking to deploy, Adobe's probably not in my top 10. That's what I'd say. S. Henry. I assume that's not Scott Henry like the DJ, right? I know, I'm old. There was a very famous DJ guy, Scott Henry, who was an excellent DJ. Just curious. Intel at 2014 levels. When do we buy blood? Ixnay on Intel, eh? Nope. Do not like them. Do not like them. Problem with Intel, they're basically still going to get their ass kicked for the next year. My biggest, I wouldn't necessarily play them short, and keep in mind, I've hated on Intel. I hated on Intel well before it was cool. And mainly because I saw them getting their asses kicked in data center. I don't care how the PC market does. If the PC market shrinks, which everyone projects, including AMD, AMD's just stealing Intel's market share. Intel, on the other hand, is completely butt-fucked. Data center is actually even more brutal right now for Intel. Them pushing back Sapphire Rapids, so much bad news for them. But my number one bad, catalyst for Intel was them suspending their dividend. They're not at risk of that. Not with that Brookfield Asset Management deal. They basically signed, I think, a pretty bad deal, but that bad deal gave them the cash that their dividend's safe. ChemLife, I love your statement. If you are catching tech knives, the thought process has to be, where are the boomer value investors going to buy this? Need to consider where valuation support is for the value-focused folks. Growth folks are in the process of getting rinsed. So Alex Camp says, okay, bet, thank you. What would be the top play? Let's chat, guys. Raise your fucking hand if you consider yourself a commodity person or a value investor. So people in here like ChemLife or Prometheum. Let me give you a good example. If you could take the basics of this company and you can strip the name off the company and send it to these boomers, and you could say, hey, here is the free cash flow yield, here's the forward PE, here's the gross margin, and here is the projected revenue growth for the next year or so. And you don't tell them the company name or the industry. If they sit there and they act interested, that's the type of tech company you can buy. All right. If I strip off the name Qualcomm and send it to ChemLife, and he can't necessarily tell whether it's a quote value stock or a company with bits and bytes in its business, that's a good sign. So Qualcomm, even Microsoft, and Microsoft's one of the probably more expensive ones. I still like Autodesk. Google, and again, the problem with Google is there's probably risk in terms of antitrust and regulatory. I still think they're fine. But they're really cheap, relatively speaking. They're really cheap. I also think people keep saying, oh, just wait till their earnings come down in a recession. Motherfucker, they're going to be the last one standing should there actually be a recession. They will grow during a recession. Watch. Because every business which doesn't pack up their shit, if they're going to do digital advertising, who the fuck are they going to advertise with? Snapchat? No. Pinterest? No. It's Google. I've been hearing that for 2 quarters now, Frugal. Am I worried about this quarter's earnings? Only for shitty companies. Yeah, it's like my brothers in Christ. Google will be face-fucking the competition. If you think I should play against Google now that they're at record cheapness, because, man, downturn in the advertising market? No. Take a step back from Google and ask yourself this. Who does worse than Google in the advertising market? Play against those companies. Google's business model is not right for this macro cycle. Windmaster, aren't they a little bit insulated, their actual core ad business? Someone put out an interesting piece that pointed out Google doesn't go down, not their actual revenue for search doesn't go down during recessions. Drummond Zerglin is correct. Previous, it was the travel specific segment, but they're a really smart business. Spencer, yep, you know this. Polly the Hammer, sucker. You kind of feel like YouTube needs to stop pissing people off so much, but you bought a subscription to premium, so I guess it worked. Yeah. New Been Around asks thoughts on Mac. Hold on. Who is Mac? Return of the Mac. Who the fuck are these guys? So real estate? Oh, probably not. I don't know anything about them already, but which one is this? Regional malls. Actually, I don't like real estate at all right now. It's all levered, right? Man, here's the interesting, there was a good Stephanie Link comment. If you believe in skating to where the puck is going to be, what have we seen already this last summer? The story of this summer has been people switching from goods to services. At some point, particularly as we start to get into fourth quarter, holiday spend, we still know consumers strong. They shouldn't be. They still fucking are. That's not my viewpoint. That's Visa, MasterCard, Bank of America, Citibank, JP Morgan. As of last week, they're still putting out them fucking statements. I know. This may not be bad. I don't like it. I don't like real estate. I think there could be a transition from services back towards goods, especially as we're getting into fourth quarter. But yeah, it's a real interesting one. By the way, Chem Life, I like that. Hits bong. Are you telling me that a shitty search algo and a homemade video platform is the best business ever? Yes. It's fucking crazy. Yeah. All tea leaves. And Google crushes any potential YouTube. Yeah. It's fucking crazy. Is the trade desk on my watch list at all? No, I'm not smart enough, Alex. Unfortunately, I am not intelligent enough to truly dive into that business. I tend to stick to sectors I know a little bit more about. I think some of the people in the chat, though, are in the ad tech space, so they may know. I've heard a lot of people who actually really like them. So I'll let them answer that. Rad, fuck you for mocking me for living during the 20s. Yeah, B-Hood. Costco had some interesting commentary. They saw prices coming down. They were pointing it out. They saw prices coming down. Here's what I love. Costco got shit on for not raising prices of membership. Yeah. Apparently everyone thought they were going to raise prices, and they pointed out they had record renewal rates, and they're like, nah, we don't need to. Bless their hearts. Rad is correct, by the way. Between me and my chat, mainly my chat, 90% of sectors could be answered. It's true. If you're wondering, by the way, how I know this, I'm not going to dox anyone. I get all sorts of private messages from you guys, including times when I fuck up and misrepresent something in your sector. You're very nice about telling me, you know, like, hey, fuckface, you missed this, but thank you for trying about your sector, which is something I appreciate. So that's why I know, like, I have some, I'm not going to point out who is who. That's fine. Not doxing you guys. I appreciate it. Know that. Oh, B-Hood. I love it. My semi-knowledge is vast, though, because I've had people who do this stuff for a living in the semiconductor space who've coached me. I think that's unappreciated. You know, I'll point out, like, listen, for like U.S. retail operations, like big box for my time at Sears, the time that I spent in CPG doing some of the back-end strategy work there, and some of the stuff on electrical grids, based on where I've worked, that's where I have some pretty good knowledge. Yeah. Semi-knowledge. Heh. Polly the Hammer. You guys messaged Jay with something other than pictures of Uranus? Motherfuckers. Yep. B-Hood. Costco, when asked about consumers swapping to white label goods, responded to seeing the opposite. No, more buying of brand names. There's actually, believe it or not, there's a piece of neuropsychology that supports that. I learned this from my time in retail and from CPG. As crazy as it sounds, it's the notion of, quote, affordable luxury. If you are truly economically worried, you may hold back on big spending, but you'll splurge an extra dollar or two for like a brand name cookie as opposed to like, you know, the white label, the store brand cookie. Webmaster's correct, by the way. Consumer is still strong. If the consumer wasn't strong, you wouldn't see inflation, or rather, you'd see the inflation potentially rolling over fast. The interesting question, though, is, Windmaster, how much of the inflation is the demand versus supply side? And if the supply side's fixing itself and that's already what's causing inflation to go down, then it raises the question of how fucking useless the over-aggression is. Need to ship all brand name goods to USA and off-brand to Europe. God, you should go into product category category management. Yep, the lipstick index. That's correct. One can't afford new dress and handbag, so the person grabs a luxury lipstick to get that high. Yeah, that's why you don't bet against Ulta. Ulta and Lulu, to me, feel like they're probably going to be as close to recession resistant as possible. Does that mean in a recession, a real recession, the type that people really lose jobs, does that mean those stocks are going to go up? No. But I am willing to bet they outperform their nearest competitor. Captain Squishy Face, you love the CPG chat. Bless your heart. Do you work for one of the big coffee companies? COF. You're not talking about coffee. What's COF stand for? Sorry. Consumer. COF? What's that acronym? Sorry. Okay, CPG. Gotcha. Yeah, you fucked up twice. You fucked up 66% of that acronym, my friend. Yeah, CPG. Seriously, if you guys are finishing undergrad, like business school, as crazy as it sounds, don't overlook when you have companies that come recruiting and you see a company like General Mills or Procter and Gamble, and it's like, well, it's not a sexy technology company. I don't give a fuck. CPGs are fascinating places to learn, and they are fascinating businesses. Shut up, Penny. Shut up. Merlnap, you would also guess the Lulu market segment. Yep, exactly. Be less impacted by a recession than lower tier. Always will be. What's fucked up is that whole lipstick factor will cause some of the lower scale people to go in and essentially buy the most entry level at more and more nicer places. Yep. You love to hear my thoughts on Kellogg splitting into 3 different companies? Buy the snacks company. Oh, snacks was the big thing at the CPG I was in. They pointed out, they had the research behind it too. There was a bigger trend towards snacking, so away from traditional meals and more into snacking. So any category that showcased like essentially like clean clean organic high protein mix natural ingredients that granola bars, protein drinks, etc. was big growers. Pack, I'm trying. Yep. Now we're going to talk about it. I want to show you guys something. I wanted to shit on this morning. In fact, I started off with the idea I was going to shit on it. As I read it, I don't know if this is fiction or not. I am going to say there's a few components of it. If it was true, it would make sense. So while I say this, anybody with access to options flow, please let me know if you see anything on TSMC. Because to me, TSMC is a bit of the canary in the coal mine. But if this is true, this is your biggest tail risk if you are a bear. If this happens, market fucking moons. Let me explain. All right. So supposedly there is a bunch of disruptions occurring in the Beijing area right now. All right. I'm not hearing anybody reputable talk about this. This is what annoys me. So I'm tempted to say this is not true. Frugal says, what if new leadership in China is even worse than Xi Jinping? I would argue you can't get worse leadership than Xi Jinping. And not only that, the fact that supposedly Hu Jintao, previous president who you've heard me mention a lot, could be behind this. No, this is good. This is good. All right, so part of it, and this is a separate rumor we've also mentioned before. President Xi Jinping has not exactly been leaving his house a while. I will already tell you there's a separate rumor. We talked about this months ago. Xi Jinping apparently had a pretty bad health scare during this entire COVID crisis. I don't think it was COVID, by the way. So that should kind of shape a lot of perceptions. Basically, when Xi Jinping went to CSO, yep, Satsuma, I lead in that same category. But when that was happening at the Shanghai Cooperative in Uzbekistan, he supposedly left early. He wasn't caught on video or even cameras with a lot of the other leaders. And the idea that he may have, quote, flown back to Beijing early, people are saying, oh no, he was doing it because he was getting deposed. I don't necessarily think that's true. I actually think it's a lot more likely if he left early, it was health related. All right. But I want to show you a picture that's, well, first of all, that's Hu Jintao. That's Wen Jiabao. You've heard me speak about these two motherfuckers a lot because they were in charge. The guy on the left, Hu Jintao, he was the president of China back when I did all my studying, both in and of China. Wen Jiabao was his prime minister, basically. They were a dynamic duo, brought a lot of peace. Still Chinese, don't get me wrong. They're still going to be in their national interests. All right. If Taiwan declares independence, they will still fucking invade. But a lot more pro-investor, a lot more pro-West, a lot more pro kind of peace. Here's what changed things for me. The idea that Wang Yi, their foreign minister, just what? This week, met with Secretary of State Kissinger. That's kind of significant. No, we're not going to watch J-Pal. Someone said it's 2 hours long. Yeah, B-Hood. So there's a lot about this article. The fact that no one else of repute is talking about this makes me want to shit on this. And a lot of the conclusions they are trying to draw on this, I am questionable about, because you could also answer it with, oh yeah, Xi Jinping is sick. Yep, China is stable. I'm with you, Setsuna. Put it like this. Xi Jinping has his next coronation. The National Party Congress is in November, early November. If there was going to be efforts to, quote, overthrow him, they would do it the traditional Chinese way, through a lot of the political backroom dealings, and it would occur much closer to then. I don't think it would make sense for Chinese apparatus, because it would essentially project instability to the world at a time period in which it doesn't serve anybody, including Hu Jintao and friends, to do it. Bulldog, why Japanese yen fall so hard? Because Japan had to buy it yesterday. So it made it go stronger, and then today they didn't buy any. So then it goes back. So yeah, I would advise you guys to read it. Take it with a grain of salt. All right? Take it with a grain of salt. But it's an interesting piece. I don't think this is true. I think you could explain what's going on in Beijing right now The simple answer is they're about to lock that motherfucker down on COVID again, because it's the same steps. Or number two, the fact that he may have left the SEO early from Uzbekistan may be because his health sucks. And that's been a rumor that's been going around for a while. I'm not inclined to think that you would see a true coup. What could be fucked up, though, is in November, if Xi Jinping doesn't get the widely expected coronation for his third term, then you'll know something may have happened here. But yeah, this story was going around. Enough people were talking about it. I thought it was worth pointing out. But man, I don't think it's likely. But yeah. Hey, Superman. My thoughts on Dollar Tree? I don't know. How cheap do we need these companies to get? For consumer defensive, 16 PE. Then again, no dividend. That's kind of a shock. I assume they're buying back shares. I don't have a lot of thoughts on this one. I'm sorry. If anyone else does have thoughts on the dollar store category, it's an interesting one. It's a good stock for a recession. I don't think you're wrong. I think the question is just timing on the recession side. Wall Street Bets loves Dollar Tree. Well, they're fucking morons, right? No kidding. No, they're smart. For all you guys from Wall Street Bets, thank you for tuning in. I appreciate you guys. Thank you for all the subscriptions as well. You know, hedgies are fucked. Yeah. Does seem to be holding that trend line. I did notice that. Yeah, their forward PE right now is underneath 17. Let's compare it to Target. Target's essentially cheaper and has a dividend. I think it comes down to why buy X when Y exists. And I kind of think I like Target better. Probably. I mean, Target to a certain degree has a lot of risk of beating the fuck out of it. So, yeah. If Dollar Tree changed its name to $2 Tree, we could bring back the $2 bill. Yeah. We should call it Dolla. DOLLA. Zim's forward PE is now 0.7. Oh, brutal. Prometheum, what does the B in BTI stand for again? Change it to dollar. I like that. Yeah. Hey, Prometheum, what's the B stand for in BTI? Come on. British. Ah. So the B in BTI, it's British Tobacco. Yeah, hard sell. Fuck them. We don't like them right now. Not on a day like today. No, they can go eat a dick. Oh, looks like Apple gave up 150. I assume the SPY is now trading like shit. More like shit. Yeah, so much red. It's brutal. Type of British company you want. Ones that sells in dollars. God, I love that argument. Yep. Guys, longer term perspective. All right. At some point, the dollar wrecking ball, the Dixie wrecking ball, is going to reverse. When it does, companies who can basically... The companies that get fucked on their foreign sales right now are going to get real attractive. So everyone always says, like, oh, Apple has so much of their sales in other currencies, which, by the way, they're raising prices in every other currency, basically. That's fine. If you think that's the reason to sell Apple, then I hope you're going to be just as vocal when the Dixie starts turning around and you're all of a sudden like, wait a minute, they already raised their prices in these other currencies, because that should make them stronger. Oh yeah, Qualcomm's cheap. Ambrose, wait till tomorrow. Well, hold on. Tomorrow is Saturday. Wait till Monday. Sneaky reason. There's nothing wrong with sending the thank you note now. The reason I like waiting at least a day or two to send a thank you note is because it gets you back at the top of their email inbox. It basically gives you a chance to put yourself back in their mind to remember you. But hopefully the interview went well. Congratulations for getting the interview. C-Dude, is AMD cheap right now? It's cheaper than Intel. AMD is cheaper than Intel. That's what's fucked up. All those value people should be losing their goddamn minds. AMD's forward PE right now is underneath 15, which is ridiculous for this company. Intel's, they'll have it at 10. That ain't true. Theirs is closer to 19. Oh, it's disgusting. AMD has 25% free cash flow margins. Actually, by now it's higher. Ronap is correct. C-Dude, why is 15 ridiculous? Growth rates, my friend, growth rates. Secular growth rates. We are talking about next year being in a recession, right? AMD will make more money next year than this last year. Everyone believes that. So 15 forward PE would be kind of grossly high for a typical like cyclical, like for example, like a steel stock. Absolutely. But part of that is because you know they're attached to the business cycle. A company like AMD, like a lot of tech, the reason you theoretically pay more for it is because they have a secular kind of growth story. They grow along with their product cycles, which tend to be should be at least partially divorced from the traditional business cycle. As we all know, though, what does secular mean around here? Just a different cycle. Chat Cat, if I had to pick one semi for a short-term hold, i.e. 6 months, which would you pick? Depends on my risk tolerance. It's super hard not to look at TSMC and go, what the fuck? AMD to me is one of the safest. I don't think Broadcom's bad at all. Qualcomm I still love. Qualcomm's a bit riskier because everyone's like, oh, but consumers aren't going to buy cell phones. Like, that's the fucking truth. But Qualcomm's stupidly cheap. Qualcomm's cheaper than Intel. Qualcomm pays a dividend, too. Don't forget that. Slay J, explain forward PE. Happy to. Forward PE. So PE stands for price to earnings. Price is your numerator, earnings is your denominator. Simple example. I have a company that sells $10 a share. All right. Numerator, 10. All right. That's the price. We know it today. In the next full year, I am projected to earn $1 per share in earnings. Denominator is 1. 10 over 1 equals 10. So this is basically saying, okay, how many dollars are you paying in price per dollar of future earnings? So right now for Intel, you basically, for every dollar this company will pull in earnings, you're paying about $10.50. That's what it means. You want that number to be low, preferably. Okay? Because that means that you could spend, for example, a 5 forward PE means for every dollar in future earnings, you're only paying $5 compared to a company like Intel where theoretically you're paying 10. We all know this number's bullshit. This number's closer to 20. Yep, J-Pal speaks. The top 2 losing sectors today, is it energy and technology? Let's see. Basic materials and energy. Interesting. Garfo. So forward PE is some highly regarded analyst's opinion with the next year. Usually it's consensus. So usually it's multiple highly regarded analysts. Sly J, you just got Qualcomm divvies today? Nice. Jay Powell's going to walk out, adjust his glasses and say, you all need to sell your stocks and you need to sell your JPEGs of monkeys and go back to work. Hey, McGill, how you doing, my friend? Thank you for the 100 bits. Greatly appreciated. Yeah, you're sure J-Pow is more than aware. Not only that, J-Pow, like, imagine what could J-Pow actually say right now and not undo. If you think he wants to push down the market, there's not much he could say. In terms of like, someone says, what do you think? If he's not gonna sit there and say like, well, fuck the rest of the world. Shit, bitch. I'm here to print money and crush puts. That wouldn't work. Yeah, J-Pow's supposed to be speaking today. If you guys want to catch him, we can. I'm always a fan of J-Pow. Why is he talking again? Guys, we have a transparent government. I am not going to blame J-Pow for speaking. I will blame the market for being stupid and responding. It's called the Fed Listens. Transitioning to poverty. I mean, to the post-pandemic economy. Interesting. You thought he's not really talking, just giving an introduction? Yeah, it could be interesting. The Bob, what are my thoughts on semis these days? Nothing has changed. I'd be cautious about jumping in them right now, but I think there's some you can nibble on. Yep. Congratulations, Jet Ski. Well played, my friend. Me mugging, what was my craziest trade or one that I won't forget? Probably playing puts on the SPRT GREE reverse merger. Because that thing was like a fraudulent piece of shit. That felt good. I should have went a lot more into it. But that felt good. That or third quarter last year when I was like 10 for 10 or 9 for 10 on earnings plays back to back to back. Am I still bullish on Twitter? Yep. Nothing's changed. Elon's eating that whole fucking shit sandwich. He may negotiate it a bit cheaper, but number will start with the 5. Nothing's changed. Hey, Song Maxi. How you doing, my friend?
I'll point out this is the first time we've had a full board of governors in 9 years. So this is to have the 7 of us here. It's the first time we've done a meeting like this in 7 years. So in 9 years. So it's terrific. So these sessions started just a few years ago in 2019 in what turned out to be a very different time. They were valuable then, and we've continued to benefit from them as we've navigated the pandemic shutdown and the path to recovery. So we started with listening sessions around the country that brought together people and organizations representing businesses, low and moderate income communities, workforce development enterprises, employee groups and unions, community colleges, retirees, and many others. We wanted to hear directly how our monetary policy decisions were affecting people's daily lives. So then the pandemic comes and upends everything, the way we work, live, learn, and conduct business. And we kept these conversations around Fed Listens going. And we thought we gained valuable insight, which continues to help guide our policy decisions. And I also think we delivered good transparency about how the Fed works to the American people through this process as well. So these events have now become a permanent fixture of our broader outreach. And my colleagues and I I'm sure we remember each one of these events that we've been part of. They're really the real life embodiment of our policies and the way they affect the people that we serve. And they do inform our thinking as policymakers. So we continue to deal with an exceptionally unusual economic set of disruptions. As policymakers, we're committed to using our tools to help see the economy through what has been a uniquely challenging period. The insights you share in these events help us to home in on the challenges and opportunities that are shaping what we might think of as the new normal of the American economy. And it'll inform us as we try to get there. So my colleagues and I are very happy to hear from our participants today, to host those of you who are tuning in to listen, and to do the work that we do on behalf of all Americans. Thank you. And with that, I will turn it over to Governor Bowman, please.
Thank you, Chair Powell. Good afternoon, everyone. And I'm so pleased to be here with you all today in person to moderate today's discussion. And I just want to express my thanks to all of you for your willingness to travel to Washington, D.C. to be with us here today for this Fed Listens event. Over the past year, we've held a dozen Fed Listens events across the country, hosted by our reserve banks. And we found these conversations to be a very valuable resource for us as policymakers. Hearing directly from people in different communities about how you are experiencing the economy helps provide important context for the economic data that we consider. These discussions help us develop a richer understanding of how economic conditions are impacting people in their businesses and everyday lives. And it helps us think about how we can best achieve stability and support for the economic well-being of all American families. Today, and in other Fed Listens events over the coming year, our intent is to shift the focus of discussion toward understanding how the pandemic experience has reshaped the economy and the workforce, and the challenges and opportunities that we will face during the transition to the post-pandemic economy. So with that, let me turn to our first set of panelists, who bring with them direct knowledge and experience of how the economic landscape is evolving for U.S. businesses. They represent organizations that include small businesses, manufacturing, supply chain management, and the hospitality industry. I know that all of you have experienced firsthand the extreme economic and financial hardships brought on by the pandemic. And during the economic recovery that has followed, you've likely also seen rapid and substantial changes in supply and demand conditions in your industries and in the communities where you live and work. Given those lived experiences as business leaders, we are especially looking forward to hearing each of your perspectives. And as we hear from each of you, I'd like to invite my colleagues to follow up with any questions that they may have. So let's start with our first panelist. I'll introduce Tom Henning. Tom, thank you so much for being here with us today. Tom is the CEO of Cashway Distributing, a wholesale distributor of food products for convenience stores and food service establishments in the Midwest and the Great Plains region. Cashway began in 1934, delivering candy to local grocery stores in Kearney, Nebraska, and the company now manages an inventory of over 20,000 products. Cashway has remained privately held by the Henning family, with the second and third generation family members involved in the business today. So Tom, for our first question, could you please describe how the pandemic changed the demand for transportation and warehouse services? And to what extent are shortages of material and labor still affecting your business and industry?
Thank you. The pandemic changed demand for transportation and logistics services in some manners that were expected and some that were unexpected. After the pandemic, we expected a fair amount of pent-up demand that would be released, and it was. In fact, probably the demand that existed out there was greater than what it was pre-pandemic. But what wasn't expected next, before the pandemic hit, was the demand for workers would exceed the supply by a larger margin than what existed pre-pandemic.
1 million
the size
dead.
of the workforce became much smaller.
1 million dead.
And it was pre-pandemic. We also believe that many left the workforce, and for a variety of reasons. And
dead.
We were wrong on that too. We really thought the workforce would grow. There was a shortage of truck drivers and warehouse workers prior to the pandemic, which the pandemic further exacerbated. The shortage of truck drivers before the pandemic was estimated at 61,000 drivers. Today, the estimated shortage is in excess of 80,000 drivers. The shortage of drivers was an issue then, and it'll be a much bigger issue now. And the prediction is it will be an issue in the future. We've seen some estimates that the shortage will double by the year 2020. And to give you an idea of the size of the driving force that is out there.
Does he know what year it is?
The universe of truck drivers today is 1.53 million drivers. So you take, a 5% shortage, a 6-7% shortage, it's going to be significant out there. As a result, the cost of labor has increased significantly for everyone in the supply chain. With the supply of labor down, the competition for drivers heated up immensely. There was an extreme amount of pressure on the transportation and logistics side, and still is, and probably will continue to be for the foreseeable future. In order to attract and retain drivers, our company raised our wage rate 3 times in 2022 so far. In 2019, we gave all our employees free health care. And then we gave all our drivers and warehouse workers retention bonuses. If they stayed with us to the end of the year, they would get a bonus paid out on the 30th of January. And that did much to solidify the workforce. Then there were the supply chain issues. And the shortages of products we sell every day from our supply chain vendors was significant and still exists at a high degree today. Prior to the pandemic, and we measure our inbound fill rates from our vendors every week. We have a number of metrics that we utilize every week. Our inbound fill rate from our vendors was 99.2%. So for every 100 items that we would get in, or we would order, we'd get 99.2 in. Our inbound fill rates, right after the pandemic started, dropped down to about 55-60%. By December of 2020, it was up to 90%. And in 2021, we had a pretty good start, and then it dropped to 78 to 80%. And this year, it was probably in the 80% range, 82% range. And for the last 10 weeks, it has been running 90%, which is good news. We changed our inventory philosophies because we had many customers out there that depended on us for products. So we started loading up our inventories. We used the popular inventory philosophy of JIT, just in time. And then we changed it to JIC, which is just in case. So we're over inventory, but those people need products. A restaurant who has got an event planned for Friday night and you make a delivery Thursday and the product isn't there, he's in trouble. And our business is all about customer service. As a rule today, most of the time, we don't know what we're going to receive from the vendor, and which is kind of unusual. There are many challenges for the vendor community out there. A lot of it has to do with raw materials. They have labor problems also. They've got priorities on certain lines that they're producing. And so anyway, most of the time we don't know what we're not going to get until the truck unloads, or we might have a call from that vendor, which is a switch from the norm. And the timing of deliveries is probably not as great as it was pre-pandemic. Since the pandemic began, our vendors have eliminated over 900 items that we no longer have. And especially in the convenience line, that's where we really notice it. You know, between wages, worker shortages, the price of fuel, and the supply chain challenges, our costs have really skyrocketed. We believe and have gone through our numbers and look at the inflation numbers.
No, Petty.
We've looked at...
I don't need a vote.
We look at our inbound freight rates, understanding that we get probably our products from growers, from shippers, from manufacturers. So they have freight into their establishments, and their freight costs.
Spies tried to kill this guy.
Freight from their establishments to our warehouse, and then we've got charges.
Thank you for explaining your riveting fucking business.
That are built into our pricing to our customers. And we've been trying to calculate what percentage of the food inflation is relative to transportation and logistics. And we've got kind of a consensus between all of us that probably 38 to 45% of the food inflation that we're feeling right now is because of logistics and transportation. It could be greater. It could be greater than that.
Or it could not. Right? Right, old man?
We do a cost index report on our total product mix, and we do that every
Bless
week.
your fucking heart.
We started doing that about 25 years ago, and
look how riveted Michael Barr, the guy next to Jay Powell. He is positively erect.
Growth.
His Adderall just kicked in, I promise you.
And the difference between the growth you're realizing every week and inflation is basically organic growth.
I like how he is telling this to a room full of PhDs and economists.
From, I think since 2020, indicate where we've been.
Not Adderall shrooms.
This last week, our inflation rate was probably the lowest it's been in, I'm going to guess, probably 4 or 5 months. It was down to 10.3%. But yet, compare that to what the inflation rate was the same week a year prior. Our total inflation for 2021 is probably 22, 23% in that range. So we're seeing some drop there along the line. We're also seeing some softness in the marketplace, which probably is indicative of why the inflation rate is lower. On the other side of the coin, we still have increases coming through.
Hey, I wasn't going to watch this. You guys were like, JJ, we should totally watch it. Yeah, this
product
is all
shortages are occurring for a variety of reasons.
So we'll see one of your unmotivated professors on the day before fall break.
On inflation.
How do I short this guy's company?
Probably next year is the drought we've been experiencing.
Run ads. What the fuck is wrong with you guys? I love you.
This from the potato growers.
The potato growers.
The price on what we call Baker's potatoes double in the last couple of weeks.
Oh, please, sir, tell us about the Baker's potatoes.
This last year, the potato growers in the Idaho area, which is really the prime country for
tell me more
the kind of potatoes of
please
food service establishment
I'm so excited
to have. They knew they weren't going to get water, so instead of planting potatoes, they planted wheat.
Oh my fucking God! So crop rotation, it's real.
There's going to be plenty of wheat that comes out of there, but the potatoes are going to be thin.
The potatoes are going to be thin.
In California, California is a big producer of food that we consume.
Holy shit! This guy brings the hits.
There's going to be pears. I remember in 2012 when the drought hit.
Yes, thin potatoes, guys.
We sell.
Are you guys thinking about the chips?
We imported fruit mix. We imported peaches from Israel. And Israel
the Israeli fruit.
And that was probably
wait for it.
You know, some of those products were available.
Straight perfection. Don't say a fucking word.
In that same boat here down the
Chips
road,
Act takes new meaning.
Are a little bit on short supply. The other thing that's happening, we're in in the Corn Belt of
fuck!
country,
This-
along with Iowa and Illinois. And we've had a lot of drought there. We're finally starting to get some rain. One of the
I'm
things
sorry,
that
sir.
happened last
The question
year,
is,
you read
could you
about
please
this, you heard
introduce
about the
yourself?
price because of the war in Ukraine, the price of fertilizer.
What's the ticker for potatoes?
Potash,
Spud, I assume,
phosphorus
right?
just went
SPUD?
off the charts. Nitrogen went from like $200 a ton up to $930. I know for a fact there were many farmers out there that were doing a balancing act. How much less of this can we use and still grow a crop? And what does that add to my costs? So my
Jordy
guess
is
is
riveted.
gonna be that we might find our production of maybe corn and soybeans maybe down a little bit this year. And depending on what happens next year and the experience factors they've got there may, have an impact on whatever some of the commodity prices are. The beautiful part in our area of the country is that the cattle market is good, and we're starting to get a little bit of rain now. But if you look around the world, you go into South America, you go into China, you go into Europe, and it seems like every continent is having their share of drought. And so this might be a
Now
factor
he's telling us
all,
about the fucking weather.
in the future for food production, and especially the near future. That's just a personal opinion.
Well, thank you for your personal opinion. He has
Labor
more
is
pages.
Still an issue. The driver pool is still far from being adequate. We have a driving force of 250 individuals, and we have positions.
Yeah, you thought he was done all tea leaves, huh?
There was a time during the pandemic we were short.
I turn it down so I can
times
talk
we were
shit.
Short 20 and 30
All right,
drivers.
I'll turn it back up.
We have one supervisor for every 10 drivers, and they drove all year. They drove vacation routes, time off for other drivers, and
She don't give a shit.
and the like. Sorry about that. I forgot to turn that on. If I can find
What
it.
the fuck?
All been there.
There's an interesting point, yeah.
Sorry about that.
No problem.
Yeah, turn it back down.
Interesting ringtone.
Was it? Was it? His AM radio went
Maybe
off.
to our second question, which is about what your business outlook for next year.
I was just going to get into that.
Okay, great. And what other challenging issues might be facing and expecting to face?
Our business outlook for next year is good. I wouldn't say it's great. First off, we sell commodities. Our company was founded in 1934, and that was during tough times. It was founded in 1934, and the products we sell are really, in a sense, recession-proof. They're people have got to eat, so we're looking for for probably a fairly decent year. On the other side of the coin, there's going to be casualties in the marketplace, and we could have some short-term challenges out there. And the way we're dealing with that is interesting. We're working programs right now to keep our customers profitable, and we're reaching out there because they're the lifeblood of the organization. And I think during the recession in the '80s, there were a lot of folks that didn't have a lifeline. Communication wasn't great, so we're reaching out to those folks now. We need to see them through this thing. And it's not a matter of extending them more credit. It's not a matter of giving them some type of stimulus along the line. It's helping them better manage their business, make it more profitable.
I want that guy managing my business.
That's going to be.
I actually bet he's really good.
Challenging issues we have. The other challenging issue we really have, and this is critical. If there's I think there's I can't tell you exactly, there's over 2 billion trucks in this country. We have not been able to upgrade our rolling stock, stock for probably 2 years. We have 250 tractors, we have 400 trailers that we need to make the deliveries.
No, it's
We
a candy
haven't been
company.
able to acquire a new tractor since November of 2019. We typically replace 10% of our fleet every year. The last
Short of-
tractors that we purchased in November of 2019 cost $106,000, and it's pretty much a standard product that we buy. Got 5 coming next week. They're $165,000 a tractor, 40% increase. Plus, we've got to pick slots now. We're guaranteed kind of halfway of having probably 20 tractors. We really need 50. We're guaranteed having 20 tractors in 2023. So we're gonna spend probably 5, 6, 7 years getting things caught up in our fleet. The cost of putting trucks on the road today is very
It's
significant.
been hard on
It's
Willy
gone up
Wonka.
right
The
around
fuck?
$80,000. So that's going to have an impact on transportation total. And when
After
you look
Willy
at the number of
Wonka
trucks
got-
in the country, and the options aren't great.
This is the replacement after Willy Wonka was found fondling the children. All right. All right. Say what you will about Tom and not being boring. He doesn't fuck kids.
Tires.
All right.
One big thing on trailers.
Willy Wonka was a better speaker. Do you want him around your kid? No.
That we finally got in the first part.
This is a good man. I agree,
Those
Steezy.
went up 40%. So 40% sounds like probably an average cost increase that we're going to see with
Rad.
Rolling stock for any operation out there. So
I'll keep licking that finger.
I think I'm getting down to the end.
Yo, please stay.
How does that inflation and cost for these necessary replacement items, how does that impact your outlook for going forward or changes to how you prioritize expenses in other areas?
One thing about it, you got to have the cash flow to do it, and you've got to have. So that will be the challenge in developing a plan, a business plan, which we will do. I think in our company is sound and solid. I don't see a problem there, but I do look at other companies in the industry, and I think they will have some challenges there along that line. And there's some options out there that they can certainly use, but it's going to be a challenge. We spend more money today on just
Everything.
maintenance. A vehicle gets so old and you have a problem. The other
Corn
thing we
syrup
need to do
purchaser.
that's going to be important is we need to get the manufacturing of a lot of those component parts back here in this country. And I could give
here
you
we
a
go.
list of things that we have to source outside of our country.
Just
that
read them out.
Put us really in.
We got
somewhat
nothing
of
to
a
do for 3
predicament
hours.
when it comes to keeping your trucks on the road.
Thank you. We'll probably follow up with you to learn a little bit more about that. But I'd like to ask my colleagues if they have a question.
Yeah, just a couple, one narrow, one broad. The first question is, are you able to pass these costs along? You obviously have been hit by, costs right across the board. And the second thing
This
is
is an
really,
important question.
do you feel like we're getting through this process? That there was enormous disruption to your business. and
Please
many
say
others,
yes.
and all these cost increases
Please
and
say
shortages
yes.
and everything. Do you feel
My
like,
bull ass would
I
love
guess
it.
there's not that much progress with the drivers, but do you feel like we're getting back to a better place with the suppliers and the customers yet? Or is there a sense of progress?
I think there is a sense of progress. We're making the move, and I think the moves you make are extremely important.
Come on, Tom.
And I think that'll get us in the right direction. And
Come on,
I
Mark
applaud
it.
you for it.
Oh, come on, Market. Give Tom some love. Give him some
I
green.
do think that we're moving maybe a little faster than what I thought in terms of the economy and everything.
Go, Tom.
And
Shut up, Brad.
so, no, I'm confident we're going to get there. We might be. The only thing I'm not confident in. I remember when the pandemic hit us, they said, in 30, 45, or 60 days, things will be back to normal.
Please don't be
I think what
racist.
we're
Please don't be
encountering
racist.
Right now is going to take a period of normalcy. It's going to be probably 2-3 years off, 4 years off, maybe. We've got to get caught up. It's not going to happen overnight.
And on costs, you've been able to pass those right along? Since
Yeah,
these are-
yeah, we have. And the dollars we work with are large enough if, and the customers really don't have a choice. They don't have a
That's not
choice.
good.
We can't lock in old pricing unless they've got contracts somewhere out there. We can't lock that in. And so they end up having to pay it. They're so voluminous right now.
Voluminous. Great word, Tom.
Part of the problem is you don't know what the cost is. If you asked me what the cost of eggs were, I could tell you probably in a few minutes because someone just told me what they were paying here a little bit ago. But, it's fast and furious.
So despite the higher prices, demand is still there.
Demand is still there. And
shit.
I suppose it's a question of the amount of money that is still floating out there, in the economy.
But
The-
please
the
don't.
bad
Please
thing
don't, Tom.
is It's going to be the lower income people that really take a beating.
Oh, fuck, Tom.
And anyone that's in production, if they're in sales, if they're in manufacturing, whatever the case is, their salaries have kept up, drivers and everything. But we've got a layer of people out there that haven't had a lot of opportunities for increases. In fact, right now, one of the things we are doing is taking everyone that hasn't had an increase and figure out how we can give them one, and how we can give them one that's substantial enough. So that's going to be a challenge, probably for everyone down the road.
Thank you very much, Tom. We appreciate your perspectives, and we'll move on then to our second
Thank you.
panelist.
I like
Chidi
Tom.
Kumar.
Fuck you guys.
Chidi is the chef and owner of Garland, a restaurant and performing arts space in Raleigh, North Carolina. Chidi's a self-taught cook who studied recipes while pursuing a career as a guitarist in several rock bands. She was a semifinalist for the James Beard Awards Best Chef in the Southeast from 2017 to 2019 and was a finalist for the award in each of the past 2 years. Chidi participated in our board Fed Listens event last year, and where she shared compelling stories about the challenges that she faced running a restaurant business during the pandemic and in the early recovery period.
Not
Chidi,
shitty.
thanks so much for being here with us in person this
Yeah,
year, so we
Chidi.
could actually meet you face to face,
She's
so
sharp.
that you can share also your perspectives on how things have changed since last year. So our first question for you is about how your business has changed, actually, since we spoke last year. How does customer demand now compare to what it looked like before the pandemic? And have you seen changes in dining
Rick
patterns that you
CEO,
think
yeah.
could be long-lasting?
Shitty walk.
Thank you, Governor Broman, and thank you for having me back. It's a pleasure to be here. So our restaurant, music venue, bar complex is one building that we have been paying rent on since 2010, and we closed our doors at the end of August. So, there were many factors leading to that decision, and most of them are really, I want to say at the outset that I'm a restaurant owner, I'm a chef, and we're working on a new project. I am speaking from my perspective as an independent restaurant owner. Restaurants are ubiquitous. You can eat at a fast food chain, you can eat at a fine dining chain that's in.
Most people aren't
airports and
prepared to
hotels all
speak
over
to the
country.
board of
Their
directors or the
perspective's
board
gonna
of
be very
governors
different than mine, and I
very
almost wish
often,
that we
right?
had a different name for our sector of the industry, because our challenges are unique, and the way we approach those challenges are very different, because the math is very different. So for us, so many factors led us to decide to close our doors, and the main thing is that dining patterns have changed. Our restaurant has been located in a city center of a very small city. We're the capital of North Carolina, and we're surrounded by government buildings and
Raleigh's
law
beautiful, by
offices,
the way.
a lot of
Raleigh,
tech
North Carolina is
companies,
beautiful.
Architects, small firms of that nature. We relied on
All tea leaves is correct right now.
in that aura. People would come to lunch, and whether they ate with us or not, they were aware that we were there. There was mostly
Raleigh,
professional white collar workers. Well, they didn't work downtown anymore, and they discovered new eating habits. They cooked more at home. They got food from CSAs, farmers, which is awesome. They've discovered their neighborhood restaurants, and they just approached dining out differently. and they didn't maybe want to make a trek downtown and struggle to find parking and navigate construction that has been ongoing. Construction has not slowed down from my perspective. In fact, things take longer to build, and I know this because we're building out a space right now for our new project. So the project starts, and then you wait 2 months for an electrical, a little breaker switch or whatever, 2 months. Or for a meter base, which are just nowhere to be found, or copper, or whatever it is. So we're not the only downtown that has a lot of construction just sort of dragging on and on. And that doesn't really invite people to come to your restaurant, right? I go to Nashville and I see the streets are dug up for years, and there's a restaurant right behind that. It's very easy for people to say, let's just go somewhere else.
So Jay Powell, when are you going to help
they discover a new spot?
Construction crews, huh?
And there are a lot of options when it comes to dining out and dinner and how you approach your food for your family and for yourself. So we're very cognizant of that, and that's a very mercurial kind of situation. During the pandemic, all restaurants, I think, were faced with decisions on how to pivot, the P word that keeps rearing its head. And so we all tried things that were completely outside of our normal way of operating. Fine dining restaurants started doing meal kits and takeout, and so you could get, maybe you were mailing something from Goldbelly. So we're doing things that are completely different for us. We're not built out for these kind of operations, but we did them. And so you start thinking about different ways to operate, and the consumer is kind of connecting with you in a different way. So things are still very much in flux. I don't think that we've settled into what an independent restaurant looks like and what this industry looks like, and I don't think that we're going to get there for another 3 to 4 years. But in this meantime, people who have 1 or 2 shops can't really sustain this much change and these many losses for that long. If I had 100 shops, making a very small profit or very small loss, you're it's an aggregate. You're looking at the health of your total business. But for us, several weeks or several months of what are pretty big losses for us, very difficult to navigate. So
I want to get to the next part that Jay Powell speaks and then end it.
Within our footprint, within the menu that we are known for, within the type of service that we do, the way our dining room operates, how many people we need to work in the kitchen, how many people we need to prep, how many people we need.
I want to see if she points out the impact of rates on business revolvers.
And then what happens after they place their order, and all of those little steps. Restaurants are basically dependent on a series of repetitive steps, and all of those are very time sensitive.
Called the Fed
There's
Listens.
No malleability. There's no work from home. There's no take your time.
Fed Listens series.
Because if the guest has a bad experience, you'll lost them forever, right? And if you don't know that that's happening, because as an owner operator, you're also working. You're no longer just overseeing. You're washing dishes.
That's what I think. All tea leaves.
Hosting and bartending, and my husband and I have done all of these things many times over the last 2 years.
A lot of people buying
miss
revolvers.
Those details, and that kind of all these little.
Oh, look at the sauciness of Brainerd right there.
Down the level in which you really want to be operating at, and that the guests, expect. And that's not to say that I think we did a really good job, but it's exhausting. We're two people. We're a family operation.
Need a bump.
Places like ours, our staffing situation has been just like Mr. Henning alluded. It's always a difficult industry to staff, but now it feels impossible sometimes. I do feel like it's getting a little bit better, but we've lost a lot of our young people who we might have considered as career hospitalitarians. They maybe want to get a job in tech sales or go back to school or maybe become a nurse.
To make more money.
An ideal way to go, but we can't really compete with those kind of benefits. We can't compete with not working at night. We can't compete with work from home. We can only offer so much paid time off. And that demand kind of gets sucked in by, or completely obliterated by people getting COVID. And so from the start of the pandemic until this May of 2022, we had maybe 3 people with COVID. And between May and August, probably 80% of our staff had COVID at one point or another, myself included. And we are very careful. We test all the time, we mask and everything. So, the way the pandemic is affecting day-to-day life isn't as data-driven as it is now. It's just a reality, right? So if a cook is out for 7 to 10 days, I mean, in 2019, that would be like, you can't do that. That's unheard of. Like, what do you have, the measles? Like, what? That never happened. But now we have to sort of think about how many people we need with those contingencies built in, but yet the cost of each person's hourly wage is, 15, 20% higher. Our revenue is unpredictable because of the way our demographic in our part of the city is. And if there's a variant that was raging, that was more of an issue maybe last year when it was. Now it's just everybody.
Fiscal policy.
It seems like
B-hood.
So it's not this like wildfire.
It's fiscal policy.
Ebbs and flows, but we've had to sustain the losses throughout that time. So, so we have our labor costs going up, and then your question, Chairman Powell, was, can you pass that increased cost down to the customer? Well, we're the customer. We're the end game, and we can only raise our prices so much. So when you go to a restaurant, everybody goes to a restaurant and they see a chicken dish or a pasta, an entree that maybe previously in a nice restaurant was $28.
Immigration was impacted by fiscal
34,
policy.
But you're not going to pay $45 for it. I mean, you're just going to say, that's insane. I can make that at home. And, you think you can. Some things you can, and some things it may not be quite as good, but it's still dinner, and you'll survive.
Be respectful, jet ski.
There's sort of this like we reach a ceiling of not being able to have anywhere to push those costs for us down. So we see fuel surcharges on our invoices from deliveries. And again, as an independent restaurant, I'm a chef operator. I make creative decisions anyway about how I cook, what I put on my menu. I work with a lot of small farmers, but they're leaving too. They're getting tech jobs and web design jobs because it's hard for them to find somebody to help harvest their crops and bring them to us.
All right, we can. I don't think this event's gonna matter. I have a hunch. Right? I just don't think it's gonna matter. That one. All right. Yep, immigration's a big issue. Immigration's obviously a big issue, but that's still related to fiscal policy. So you guys can see it. Is Apple finally capitulating? Let's see. That 148 now. Volume hasn't. Volume's probably up a little bit, but yeah. Yeah, look at this. Just everything's green. Except Domino's. And Generac, which has a short report out against it. Dollar Tree's also hanging in there. IDX Laboratories. What's this one? Regeneron. Yeah. Well played with the Apple put spreads. Yep. I'll wait till someone a little bit more credible than that account. Yeah, that account doesn't look legit. I'm still waiting for like a legit account to point it out. That's what I'm waiting for. Looks like we're all gonna die. Ah, look at that map. It's brutal out there, my friends. It's brutal. AMD's trading at what? 67? Oh, savage. Hey, Trav. No, it's a good thing. So, the bot-related negotiations of the Twitter case. It's real simple, and this is what I think a lot of the people who talk on Twitter don't understand. Twitter has a metric, MDAU, monetizable daily average user. When you see a known bot account, rest assured, for the most part, Twitter knows it's a bot. What Twitter does is they remove that account from their quote MDAU because MDAU is what they present essentially to their advertisers. You see, here's the thing. If Twitter has too many bots and it counts it as real users and they send it to advertisers, advertisers will know how many people are returning, right? And if that's the case, they're not going to be doing advertising with Twitter. See, the truth is, if there's too many bots on Twitter, the advertisers would know. They would be the ones telling you. All right? So there's this MDAU, monetizable daily average users, not to be confused with daily average users or total accounts. So what people seem to misunderstand is that you can go through like Elon Musk's, follows, and you can find more than 5% of those accounts can be bots. That's fine. Twitter never said 5% of users were bots. They said about 5% of all of the monetizable daily average users are bots. And that's what will become the interesting question. Make sense? So that's the issue that Elon's basically going to have to prove, that Twitter has some knowledge that the monetizable daily average users is materially wrong. And that's what people don't seem to understand. So, yeah. That's what will get him in trouble. And it almost feels like he doesn't either. He's intentionally misrepresenting it, which is not going to work out well for his claims at all. Or he just doesn't understand it, which, again, is why I like Twitter over Musk in this case. Mm-hmm. Yeah, now that Twitch is dying, when are you going to make a YouTube channel? Theoretically, if Twitch is dying, I'm going to be okay. More people to watch me, right? Maybe I should make a TikTok and go for them kids. Be like, yes, kids, we're going to talk about the type of gambling you can still do on Twitch. Mm-hmm. Yeah, I do think they have. No, I'm working on it. Gonna go for them kids. Pedo alert. Yeah, I'm targeting kids. FBI. Really? What do we think recovers faster than SPY in general? Depends. Do you think we get the perception that we go through a recession first, or that we're not going through a recession first? Because if it's not the recession, then I believe the argument usually is for those quote cyclicals. If you think it is a recession, believe it or not, tech growth, which I think is crazy. I still don't know yet. Yeah, not so much my propensity for bussy and gambling, yes. And drinking. On stream. We're already in technical recession? Yeah, that's a better though. Trust me. The idea that we're in a technical recession right now should actually be a little bit more frightening if people get a little bit too complacent and then don't see the idea that you can actually have the real recession happen like 6 months later. Meta will kill the market again. I've heard rumors Meta's going to be doing fine. That's the more interesting thing. Behood, the global central banks need to start coordinating about their moves soon. That's an interesting argument. I can see that. Steezy Burger, they're going to change the definition of recession again. The definition has never changed. All right. If we have to keep having this conversation, I will turn into an asshole on it. All right. Yeah, no, Garfield points out, just last week they're in Basel together. Jetski, you should be smart enough to know. Recession has nothing to do with the market. Recession is economics. Market and the market and the economy are not the same thing. You should know about that. I know, yeah, God, was there something about that? No, it's not changed in 30 fucking years. Recessions are always called after the fact by a group of individuals called NBER, National Bureau of Economic Research. That has not fucking changed. That's never changed. However, because they tend to call it after the fact, and because everybody loves the idea of the markets being a little bit more like fantasy football and instant tracking, you've had people use a nomenclature, a shorthand that says if you have 2 negative GDP prints, then you go into a, quote, recession. It's the lazy definition. It's not the real definition. It never was. Nothing changed. Yeah. The interesting aspect about it is, believe it or not, back in COVID, the COVID lows, by the technical definition, was not a recession. NBER went back and ruled it a recession. Yeah. That was interesting. Yeah. Market's showing no heart, which is fine. It's Friday. Yep, Prometheum is correct. The recession still is going to come, like the actual definition. Well, thank you, Jetski, for letting me have my fun. I appreciate that. Spy calls for next week? Ugh, I don't know if I buy calls yet. Next week, keep this in mind, guys. Next week, from a seasonality standpoint, it's like one of the worst weeks in the world. Like, that's the bigger issue. Now, keep in mind, the end of next week is end of quarter, which could be interesting. But I don't know how to play it yet, so. Seasonality, I don't know. It's just when you look at generally how the economic calendar has worked. There's been a few different posts and different articles about it. Is it tax loss harvesting? Law bad. Not liking how everyone woke up a perma bear? Nah, don't worry about that. Nah. End of quarter rebalancing is just next week. Yep. And put in mind this, guys. You look at the absolutely disgusting, ugly chart. You're buying puts here. You're buying puts very close or at the 52-week low. It's the same thing technically as buying calls up here. It's the risk. May not be a bad one, though. You always look at the overlayer, correct? But gasoline futures, happy to. Look at it. Oh, you want to drive the Canadian oil mafia crazy. Tell them how you'll vote for Joe Biden forever for his tireless work in bringing gasoline prices down. Watch him go nuts. Anyhow, like, I think he basically, this is when he sent the tweet asking gas stations to lower prices, and they fucking did it. Brad, and the same oil mafia will blame Biden for gas price. I know. It's the overlayer. You gotta extend the O's. It's not one O, it's a lot of O's. A lot of O's. Micron will go green soon? No way. Will they? Holy shit, yeah. They got upgrade. They didn't get upgrade today. They got reiterated at buy. Oh, they actually dipped lower than June. June, July. They're lower now. Yeah. And their earnings are next week. That's scary. They should still have another shitty quarter in them, at least. At least another one. Yeah. This is the story. The strength of the dollar today. Oh, savage. Look at this is just the euro impact. So even though you had the pound getting pounded upon, the euro versus dollar still shows the dollar showing strength. Hey, Nose Kisser, how you doing, my friend? Why is everything red? A lot of people touching themselves. Pretty much all the semis besides Texas Instruments and On Semi are lower than the June, July. Yep. But Master, I in Micron. I'm not in Micron shares. I've never been. Turkey McNugget, you got a link for it? Lol bad. Remember when energy bulls were saying hedge funds were trying to hide their positions in oil and that's why they kept dying? I never heard that. No, I never heard that. That's interesting though. Costco, oh, should have raised the prices. Damn. It's not their worst day, but it's definitely not a good day. Flex buy. Costco deserves to go. Yeah, Costco's the most over, like one of the, without talking about meme stocks, it's a ridiculously overvalued. The problem, the reason I don't play against it, man, it's a well-run company. But the valuation's nuts. Yep, do right by customer, gets punished, yeah. What was the June low on SPY? The SPY closed at 366. The intraday low was 360. We actually haven't hit it yet, supposedly. We're keeping an eye on it, though. So, next week we have home builders. A lot of home housing data. Hold on, that's this week. Sorry, next week. So we get the Chicago Fed Activity Index. Big deal. Durable goods. Interesting. Case Shiller on the homes on Tuesday. Huh. Tuesday could be all homes data no one gives a fuck about, kind of, but. Oh, next Friday. Oh, next Friday, spicy. Next Friday is spicy. You realize next Friday, it's the end of month, end of quarter. So there's a lot of different like hedge fund, mutual fund, pension fund activity that's going to happen anyway. Combined with PCE data that comes in. Ooh. Yeah. Next Friday's big. Thursday, you're going to have GDP revisions for last quarter. Could be interesting as well, but not too much. You saw Costco fair value at 44. What is it now? All right. The PCE's moon or recession, Sag. Well, PCE, it's just another version of inflation, but it's the one the Fed likes a little bit more. Inflation CPI, when you measure it, presumes everyone's buying the same basket. PCE is looking at what people actually buy. So J. Powell and friends have said PCE is actually their favored measure of inflation. Yeah, PMI came out. No one cared. It was good. It was good. Kind of hit that Goldilocks level. I didn't go through the sub indices though. I didn't see them this morning, so I don't know what the prices paid specifically said. The PCE is delayed. Yeah, it's delayed from August. Gotcha. More accurate, but also out of date. Well, I think accurate would be good. Oh, savage. Look at this. Yep, services up 4 points over the last PMI, still sub 50. But was that that wasn't prices paid, right? That was just the services, the master index. Margie, what are the chances the market doesn't care when inflation? I mean, I don't ask me what to do about market reactions. I can tell you like what's possible on the economic side. I can't tell you the market's going to react, right? They may not give a shit, yeah. At this point, you don't need new narratives for the market to go up or down. Any given day, the market can go down because you're like, well, the Fed's going to keep hiking. They don't care. They're just going to keep hiking. And any day the market can go up because you're like, and companies are still reporting, generally speaking, better than we're pricing in. So any day we can go up or down, and you don't really need any like new narrative, any shift. Oil too high. Inflation is crazy. Oil crashes. Spot. I know, right? Kahuli, you wish you weren't trapped in this golden handcuff job on the eve of recession. It's not a bad thing. I'm telling you. Should have jumped 2 years ago. Job market's still strong. J. Powell insists. And all the data seems to support him on that one, by the way. Yep. Vanta Black, by the way, is correct. Historically, stocks go up on rate hikes. Yes. I think they basically said every time, what is it? 12 months after the first rate hike, the market's higher. Yep. But Vanta Black is absolutely correct. By the way, first time chat, so thank you for speaking up. See, now you're never going to sell your AMD. That's a spirit, right? Oh, all right, guys, let's do the vote. Let's do the vote. Do we get power or do we get sour? 364 will be the pivot point. Do we get 364 or not? Here you go. Time to put your points put your points on the line. Remember, I think they actually have more value right now than the British pound. Yeah, the reflection on the monitor, correct. You're all in on sour. Up. With the green. What's the VIX been doing, by the way? Finally saw the VIX move up. Took a while. All tea leaves. I see you're in sour hour. Unless you're actually betting real money on power. Yep, sorry. Yep, Dixie still going up. There've been so many stories of people who've meant to buy like puts or meant to buy calls and accidentally bought the exact opposite. And they're always like, yeah, and it worked. And you're always like, shut up and take your money. It's going to be fun when we start going up, Windmaster, because you know this is going to be what happens. Remember, at some point, someone's going to be calling this is still a bear market rally when it isn't. And you're like, we're going to keep going up until you specifically capitulate. Hookers and sake. I respect it, C-Daw, dude. I respect it. It's not mine. I did jump out of the BMY play. How is it doing today? I know it was actually doing reasonably well. It's still doing reasonably well. We're at 365 now. Yep. Fig. I changed it for when we had FOMC. See if I'd grab more people. I also have been looking around the last few nights, and I noticed that more people were on stocks and bonds than expected. Previously, the category was pretty much dead, so that's why I'd switched over. I'll jump back and forth. Shorts covering? Potentially. Keep in mind, the value here that I'm going to be interested in is, do we end above 36666? That's what I want to see. And selfishly, because that means our low will remain 3666. And damn it, 3666 is a great number to have as a low. Yep. It's the mark of the devil. Am I still in my Twitter play? Yes. Still in my Twitter play. If I sell, you will all know. Nothing's changed on that, though. That would be great, Garfo. 36669. How's Twitter doing, by the way? Look at Twitter go. That's a V. At least we're seeing some volume. You spent 1K on making a cat point. I fucking love it. I was looking at that. At least Zuckerberg's losing more money than you? Oh boy. What's this? Okay. Investors flee to the safety of checks notes, orange juice. Oh, that's savage. Sorry, they're previewing new Hearthstone cards. Yep, we're over 365 though. OJ's up on a hurricane. Is it? That could make sense actually. That would actually make sense. Hurricane's gonna smack through Florida. Big bounce on SPY. Come on, SPY. I'm cheering for it because I want that 36666 low to hold because it'd be a great number. Oh, look at it. Twitter is about to go green, guys. Again, it was green earlier today. It's green earlier. Look at this chart. Oof. Look at it. Look at it. Yeah, you get companies like AMD, Qualcomm, even CVS. CVS is down like 2%. Garfo. Most orange juice comes from Brazil. Well, the U.S. orange juice we get comes from Florida. But you're right. You guys tend to have more of it. Different hurricanes, Trade Perfection. Different hurricane. I know. There's a separate hurricane that's going to fucking hit Canada. Why not? The frozen OJ? Oh, I meant the fresh shit. Because we even have brands that specifically stick stickers on it that says orange juice from Florida. Yeah, State Perfection didn't realize there's more than one hurricane. Yeah, how fucked is that? Canada may get hit by more hurricanes this year than the U.S. Correction. Except for that hurricane that hit Alaska. And I know someone's going to point out, but Jay, in the Pacific Ocean, we don't call them hurricanes. I know. How about cyclonic storms, right? Oh, Garf. Okay, the futures are frozen. Okay, so it's Brazil. Gotcha. All right, then yeah, then it doesn't make sense. I don't know why it's up. But are you guys drinking a lot of orange juice? Brazil, is this on you? You guys causing it? Because every other commodity's down. Frozen OJ ice cube sounds good today. True story. Anybody who drinks, quote, fresh orange juice, do you know how old the orange juice you're drinking on average is? Huh? Some of you know the answer to this. How old? That fresh orange juice. How old? Much longer than 69. Alineo is correct. Usually it's at least a year old. Yeah. What they do with fresh orange juice, they put it in gigantic chambers and suck all the oxygen out. They give it the suck. So it stays fresh. But yeah, they stockpile it. It's over a year old usually. Yeah. Because they suck out the oxygen. It's a complete, what's the term? Anaerobic. You have a pretty much sterile environment. The suck. With apples too, yeah. Jay Arlington, did I ruin orange juice for you? Go ahead. Oh, we already done the poll. You missed it. Yeah, they suck. The suck. S-U-C-C. Suck. Yep. Twitter's about to go green, which is good. It's already been dancing around that level. Spy, let's see if it can pull some gangster shit. Needs to work a little harder, not gonna lie. Remember, if we close right here, deeply in the power hour, by the way, you will still have seen a new 52-week low. Because last time we closed at 366. Garfo. Coffee certified bags is at a 25. Oh no. Can't be. We are not drinking tea. Fuck you. Like the most CNBC heads you see out there this week are calling for SPY 330 to 350. That's a pretty big range. It's a 20-point range. Coffee is cheap as fuck. Is it? Yeah. Is this the last hurrah for the Bears? Probably not. No one wants to say SPY 290 or less. Well, you got to understand that to say that, you're basically insinuating there's an additional 20% drop from here. And at this point, like, what's the stimulus? What's the catalyst? It could happen, but Electric Slayer, I'm sorry. I have not ran a single fucking ad manually. So if you're seeing ads, it's because you're not a subscriber. I'm sorry. Catalyst is being called as corporate earnings. Got it. They do know, like, the companies were giving earnings this week and was, again, not bad. Yeah, Oogly's correct. It must suck to not be a sub. When Master points out, earnings dropped 80% in 2008. We know this is not 2008, right? Like, you can have stocks go down without a major financial crash due to, like, a structurally fucked market, right? Okay, one of these I've been tempted to make it so that I'm not going to pull up companies unless people do a dono as a form of monetization, but I'm not doing it yet. Yep, VIX is at 30 plus. Yeah. We're over 366. Come on, I want to end high. I want that number to stay 3666. If not, if we have to go lower, fine. I want 342.5. No, 3420. 3,420. That's what I want the lowest. I want a number that makes Elon Musk chuckle. You could let subs pick one stock you do coverage on? Yeah, I could. Yeah. Here's the thing. It'll take a lot more than $5 to get me to start reading shit after hours. Put it that way. Professor Clown, interesting one. Talk about the Iran conflict. I mentioned it earlier this week. I'm keeping eyes on it. I want to be relatively optimistic. There's a lot on the international side, guys. I want to keep, like, this weekend's going to be super spicy. In fact, you're not going to believe me. You're going to say I'm being a permabull. If you have short positions, be cautious holding over the weekend. If there are stories of Xi Jinping and or Vladimir Putin getting overthrown and Iran is now having mass protests from the women, you guys have to understand all three of those are positive catalysts for the U.S. market. Be cautious. That's all I'd say. The Xi Jinping one, people are starting to post about it now. Looking kind of wild. Which one's this wallet making? Is this the shitty? Okay, yeah, I already looked at this. I want to see better reporting. Mm-hmm. Margie asks, if he gets overthrown, I assume about Xi, isn't that bearish in the short term because China markets puke from uncertainty? Nope. Not if the instruments behind it are former President Hu Jintao? Nope. Essentially, you might see an immediate reaction to the China markets be negative, but it would be a huge positive. It would be a huge positive. Isn't Xi number 2 more market friendly? Yes. It's Xi versus Li. If Li was the person chosen to essentially replace, yes. But the previous president, who may have some fingerprints behind this, Hu Jintao, was very market friendly. Put it like this. If he gets overthrown, the question becomes, is it an attempt to basically recalibrate China back towards the West? You may then see a lot more movement from the West to start being a little bit more accommodative towards China. That's why I'm saying keep an eye on any unusual calls activity in TSMC. Oogly, this might shock you. I don't care if people play puts on companies I like. I can disassociate between a company and a stock. I'm perfectly okay with that. This is not a this has never been a stream where we talk about here's the play to make, you know. We don't do like signals stuff like that. So don't ever feel like you'd hate to know you've been holding AMD puts. No, I don't blame you for it. Listen, you've been proven correct. Well played. It's ballsy to play puts when something's at a 52-week low. It's the same thing I tell people when they're trying to buy calls. Because a lot of people were talking about, do I buy calls on semi now? Well, 3 weeks ago when they were at a 52-week high, and I was like, be cautious. Yep, Behood is correct. CCP gets to blame all the failings on Xi, correct? You get to wrap up all of the negative connotations and throw it out with them. Also, keep this in mind, guys. I still, when I look at those reports on the potential like issues with Xi, I think a lot of it can be explained by the guy is apparently in bad health, which, by the way, may also be a reason as to why he may not move forward in November. But yeah, if anything happens, it's bullish for the U.S. market. Xi is like the worst case scenario right now for the U.S. market. There's been rumors while I'm making, for the past 2 years actually, that like during the entire COVID situation, Xi had separate issues. Ruler of Russia brings 300,000 mobilized civvies to Moscow to be shipped off and killed in an unpopular war. They instead storm the city. Ruler gets shot. Then a few years later, it's 1917. Love it. Is he a smoker? I didn't think he was a smoker. Raising Keens. Is this talk of overthrowing Xi just normal party elections, or is there some sort of unrest? No, they would never. This is not something an opposition party would talk about. They would not do that. No. Instead, if it's bullshit, and it's likely bullshit, I am more inclined to blame, like, essentially, like, the Falun Gong style individuals who love just, like, talking shit. Doesn't China have it insanely? Yes, they do. China still has a lot of smokers. Yep, Spencer's pointing out the stroke, which I thought I'd heard about a while. I remember I quit smoking before I moved to China. It's like the first day in China, like 5 or 6 different people are offering me fucking cigarettes. In the office, by the way. Yeah, you could smoke in the office. You know what's going to fuck people up on this one? One of my coworkers, her name was Carrie. She was from Detroit. Blonde hair, blue eyes. She was a badass. She was a close friend of mine while I was there. She was wonderful. The point is, it's a woman. She was also a cigarette smoker. They would offer me cigarettes, never offer her cigarettes. So she'd pull out cigarettes and they'd be fucking shocked that a woman was smoking. Later on, one of the general managers complained that she was smoking. The guy who complained was complaining the woman was smoking while he was smoking. And I just kind of looked at him and I'm like, that's not going to fly, homie. Hey, Pitaska. I bought some air, just some shares. Today was a day I wanted to deploy some money. I'm still heavy cash. Still watching the bloodbath. Seeing if the market shows any signs of giving a shit. It's kind of not. But right now, if we end here, guys, we will end with a new 52-week low. By the way, it will be an ending low. It will not be a true 52-week low if you look at intradays. Intradays, we actually hit 360 back in June. And today, we did not. Does that mean we keep drilling? I don't know. What happens over the weekend? It could be. But remember, next week, apparently PCE data comes out on Friday, which coincides with the end of the quarter, end of the month rebalancing. That could be spicy. How's BHC doing? I know my position sucks in it right now. It's red. Under 7, yeah. Oh, look at that V. Is Twitter green? Look at Twitter go. Twitter's green. Don't give me hope. I thought it was 360. All right. No, I'll trust you. Remember, guys, from the Discord itself, there was a meme posted. Yep. Oh fuck! You're gonna make me be greedy when others are fearful. Oh yeah. Oh Jerry, you love it. Shut up. That disturbs you so much. Shut up. You're erect. Kinlar. We're friends. You don't have to hide who you really are. You're greedy at 100. You were wrong. Yeah. Are you talking about Google? You'd smash. Let's see if anything on my watch list. So Twitter's green, barely. TLT is green, barely. A lot of inverse shit's green, which I track. Open Doors green, barely, but are you fucking kidding me? Onto is green, all right. So something related to semiconductors is green. Micron is green. One of you guys called that one. KBH Homes, green. Guys, GME is green. In fact, GME is fucking mooning right now, relatively speaking. Look at this. This is GME. Look at the apes go. Yeah. Yeah. You know what hurts worse than having your long portfolio and your 401k getting decimated? Watching this shit. The girl's earning a lot more than you. Do you still need to pay child support? Usually you would probably, I assume you'll pay some. I don't know. It's between you and your judge. I wouldn't know. Your GME calls may be saved. Has to be Max Payne coming in. Let's see. How the other apes doing? Let's see. DRV's up. Beyond Meat is up. Because there is no God. AMC is also up. Yeah, so apparently it's good to be a shit company. That's a funny thing. When you have all the very logical bears where, like, we need to go down, we need to go down, we need to go down. Like, this is why, and this is, you know, it's because if you take what really, you know, if you just knock a few dollars off EPS and you say we trade down to, you know, such and such, then this is the appropriate, like, S&P level. And then you're always like, yeah, and GME's up. Johnson & Johnson's also green. Nice. Gaseous Clay. Buy profitable companies, they said. Kim Kardashian just did a Beyond Meat. Nope. No comment. Yep, healthcare is, relatively speaking, held up. CVS actually down 2% is kind of interesting. Have you guys been keeping track of Kano? You know why Kano's up? Supposedly, they may be getting acquired. Humana and CVS reportedly eyeing Kano Health. The price target that's being bandied around is $14 fucking dollars. Just saying. It's trading at under 9. Do I play Elden Ring? No. Speaking of, tonight, it's Goose Goose Duck night. It's Friday night. And Pitoska, just like Signify, healthcare operators are all getting bought out. Sounds about right. Yeah, what the fuck did Spy just do? Oh, look at this. If we close higher than this, we will not have made a new all-time low or a new 52-week low. Johnson & Johnson's my favorite porno. Oh my God. Why are you guys like this? Huh? Have you stopped and think? Have you prayed? You need Jesus. We have 30 minutes. I know. Imagine that. After all the deep dicking we take today, we don't close the new all-time low. I want to check to see if there's any crazy options activity in TSMC. Because if there is any idea of... No, it's really not that much. Penny, why isn't Tesla moving? Because you touch yourself, Penny. All of us know that. My favorite semi, Nvidia's mooning. Oh boy. Yeah, for anybody who tracks unusual options, if there really was anything to occur in China with Xi Jinping, TSMC will be where it shows. Yeah, check out. I actually did see that. Raising Keens. The fact that we got any even close is pretty sad. I don't know. I'm still going to sit there and say, based on that FOMC report, if you read that and you're going to take the Fed at their words, we should be lower. We should be lower. They told you they see inflation coming down and they still going to raise rates. They don't give a fuck. That's actually incredibly bad. Okay, my bull ass sits there and says, well, I don't need them to say whether they're going to pivot or not because I think they're data dependent. They've said that enough. So if they saw inflation going down, they'd stop raising rates. Through their economic projections, they're basically saying, we can see inflation coming down. We don't care. We're still double tapping it. The candy guy pumped the market? No, he killed the market. Candy guy wasn't interesting. Let's see if Twitter can keep fucking. Oh! Twitter, new high of the day, basically. Good for them. Getting a few spots of green now. Yeah, Micron went green. IDX, yep, was already green previously. Generac has a short report out against it. Trucking green, what the fuck? Is there Elon news? Let me check. Oh, I'm sure it's short covering. I'm assuming there's no real information. Damn droid. Apparently there's news about China wanting to promote sound, steady relationship with... Wait, well, you have a link with that? By the way, first time chat from Damn Droid, and if you got a link for that, fucking please stick around. Oh, hell yeah. It's from the Chinese foreign minister. Yeah, he was in New York. He had his picture taken with Kissinger. Can someone please get my man here a sub? Here, please stick around, yeah. Jointly promote bilateral relations with China and NATO directly. All right. Me Muggin, thank you very much for the gift sub for Damn Droid. Yeah, thank you for sharing this. Yeah. Guys, got to remember, this is Xinhua. Okay, this is Chinese media. All right, here's what's important. The fact that they're putting this out, this is actually pretty interesting. This is actually pretty interesting. B-Hood from yesterday, but could she have gone too far? Oh, man. What China does on corruption charges is fucking amazing. If they shoot you, know this. They will bill your family for the bullet. That is 100% true. Could she have done it? Yeah, I know. Man. Why would China be part of the North Atlantic? No. They don't want to be part of the North Atlantic organization. They want to cooperate with them. Glass boys, they just kill you. It's not only that they kill you, they send your they bill them for the bullet. That's gangster. That's gangster. Because you know bullets are not that expensive. Not in fucking China. It's going to be so interesting to see people like Jem Carson, very, very smart guy, by the way. If you do see, like, if basically, not even if you're seeing Xi Jinping being softly turned away from the lifetime appointment. Because put it this way, if you don't have Xi and instead you have Li at the next at November's Congress, National Party Congress in China, if that's the case, China's not going for Taiwan anytime soon. Anytime soon. Windmaster is actually correct. Maybe they get rid of Xi so they can help get rid of the Russian relationship. Basically, it'd be more almost like Windmaster. I would view it as they want to reset relations with the West, which means they're not going to be provocative over Taiwan. They're going to maintain their rights. There'd probably be back channel conversation with the U.S. to say, listen, could you please stop with the congressional visits for a time period just so we can ramp down the nationalism domestically? Caliato, do you have to tip for the bullet? No tipping, no. China actually wants to join NATO. All in TSMC. Yeah, I mean, no, TSMC as well. Does that reverse the chip ban? Doesn't have to reverse the chip ban. There was actually an interview with Jensen Huang this week where he basically said the vast majority of the data center or the AI chips we ship to China, even the ones that would be covered under that ban, we have no problem. They will not require a license, or we don't think there'd be any problem with getting a license. Basically, him loudly saying, we don't sell to the fucking military. We sell to companies. B-Hood, I love that thought. Is it 4 years or 6 years? I don't like how God... Yeah, you're not wrong. You're not. 6? Thank you, B-Hood. 6 years. 6-year terms. He's already served 2 of them. God, imagine if the West grabbed... or if imagine the situation for the West if after Hu Jintao was president, we got Wen Jiabao. Wen Jiabao, life would have been good. We'd all be investing in China right now. That guy was the good type of populist. Sing, probably, yeah. Yeah, I don't think it's the worst idea. I mean, listen, right now, anything can go lower. You don't need a reason. Okay? Same point, anything could go higher. And the simple reason could be simple, very simple. Oversold. All right? For companies we've talked about here that we like. Okay? So like CVS, Microsoft, Qualcomm, Broadcom, which is a Prometheum stock now. Prometheum, you own that one, but I think it's a good one, a good example. AMD is another one. UNH. Okay, these are all really good companies, solid companies. The advantage of CVS and UNH, by the way, you don't have to give a fuck about Europe or China. You don't have to give a fuck. They don't deal with them. Did you miss the Qualcomm? Yeah, I haven't had a chance to speak about it. I loved everything that I heard. I went back through it. I loved everything I heard on the Qualcomm event. The thing that did not get a lot of press at the time, and I think Dan Nyset pointed it out really well. Let me see. Was it him? It may not have been him. No, Saran did it. Here we go. This did not get a lot of attention. All right. 250 million vehicles on the road with our cellular connectivity, right? In November 2021, the estimate was 50 million. They've basically 5x'd it in about a year. Qualcomm has almost no competition in automotive basebands. All right. This is just a reminder. Qualcomm is such a strong company. And the SPY is fucking now. Listen, it's still down quite a bit, but yeah. 5 years. Okay, got you. Yeah, SPY's kind of fucking. SPY's kind of done with this negative shit, right? Let's buy puts. Just kidding. Yeah. By the way, if we end here again, we're not making a new all-time low, or at least a new 52-week low. Oh, Prometheum, you know the answer to that. I don't think the problem is the market's love for NVIDIA. I think the problem is the market's complete and total non-appreciation for AMD. I think it's insulting. There's a lot of very smart people here who have made the point. Well, the thing about AMD is, come on, they can't sustain that growth. I mean, that was all COVID pull forward. And I'm telling you, no, most of it was actually data center related. Data center is what's spicy. But yeah, I have no problem with NVIDIA getting the love that it does. Listen, anyone who buys Tesla for their story, bullshit. They should be taking that money and putting it into NVIDIA. All right. But at the same time, AMD it's such a strong company. It needs to get the appreciation. All right. It needs to get the milk. That's all I'm saying. AMD growth, all related to their technological advantage. Oh, Windmaster, go one step further. You're not wrong. Come on, strategy, Windmaster. Strategy. Appreciate it. Call it out. You know the answer. Call it out. By the way, everything Windmaster's saying is right. I just want him to go deeper. AMD's growth is related to their technological advantage. Yes, but it was their strategy. Their strategy about 5 or 6 years ago, Lisa Su reset expectations and basically said, we are going to lead in performance everywhere, and data center, we're going to lead in performance per watt. Now, all of a sudden, when all of us start talking about energy, the cost of energy, etc., guess what? It's coming to a point where you can make an ESG argument that data centers, if you're going to run on the x86 platform, you should be running on AMD over Intel. The interesting thing is when Windmaster says, but competition will get harder, he's correct. But who's the competition you're talking about, Windmaster? Because you're not talking about Intel at this moment. And he already knows this. You're basically talking about ARM's upcoming move into the data center. Take care, Holy Cow God. Sorry, Unholy Cow God. I believe the next catalyst, by the way, for AMD, I have no clue when AMD's earnings are, but they have their upcoming, what's it called? Radeon gaming card presentation. They announced the date of the event the same day NVIDIA had GTC. So, kind of an asshole move. Windmaster, one thing you don't like is Lisa Su saying on ARM, our customers aren't asking for it, but we will if they do. They should be more proactive like NVIDIA. I get that. Keep this in mind, Windmaster. AMD does ARM now, in particular. They've always had some exposure to ARM, but when they bought essentially both Pescando and Xilinx, both of those are ARM workshops. So now they have a software ARM that can also, get it, ARM, that can do ARM too. So they just don't use it for the main processor, the main socket. They'll use it for all the auxiliary stuff, which I think is super cool, but yeah, you're not wrong. Let's see. Yeah, so save the date, 3rd of November. RDNA, their new architecture. The wide-scale belief is NVIDIA fucked up. NVIDIA has been going for the best, the best, the best. And all of a sudden now, they're Pesando. All right, sorry, not Pescando, Pesando. You're right, Jordy. My bad. It's Pesando. Yeah, the thing about the new 4000 series RTX cards, guys, they are super powerful, super cool. And to be honest, 90% of you do not fucking need it. Okay? You don't need it. AMD may go for a cheaper release that may actually get a lot of popularity. Polly, is this you? Be honest. Is this you right now? C-Dot, you heard NVIDIA's new GPU release is a flop? I don't know yet if I'd call it a flop. Like, super powerful. Oh my god. The 4090 series is super powerful. I question, like, do you need it? Like, holy shit, super powerful. You're eyeing a second-hand EVGA 3060 Ti when cheaper. Good luck. Yep, there's a lot of room for AMD to gain market share in the GPU market. Keep in mind, the big things I want to pay attention to in the future really is cloud services on behalf of NVIDIA. Actually, I want to take the moment too. Is the whole thing, or yeah, it's the whole thing. There was yep, here we go. But I feel that NVIDIA kind of drops the ball. Whenever they do these big events, they present lots of really cool, smart shit, but they don't put out like a video that kind of sums it up all well. This one, I think, does well. Straight perfection. You don't need all that extra stuff to drive your car. I know, and yet people will still pay for it. How fucked is that, huh? Mm-hmm. Your wife will always know where you are. Always. Well, if you have your cell phone on you, they're going to already know. And Tommy Hayes, I don't know if that's the location within the car. I don't know. I assume the supercomputer, or the compute part, basically the CPU for the car, which they really want to do. I assume that's probably in like the front location. You think Tiny Jensen got the point across? Don't need no stinking vid. Listen, we're ending pretty strong, and we're still down 1.8% of the day, so it's still a shitty day. But, yeah. Oh, market's not green, Reddit swap, unfortunately. Unless shit goes completely nuts for the next 5 to 7 minutes. Me mugging pay per mile. Yeah, I know. I mean, keep in mind, I think like one of the longer term, more interesting trades could be long Qualcomm, short NXP, or Infineon. Because I think those are the companies that are actually most at risk for Qualcomm jumping into auto. Keep in mind, when Qualcomm tends to jump into a sector, they tend to do pretty well in it. There's a reason AMD's not in cell phones. Because no one wants to fucking compete with Qualcomm. The other reason is x86 sucks in cell phones. Who's this guy? Martin Pelletier. Says, yes, we're buying today and in size. Are you fucking serious? Ford Motor Company has delayed deliveries of certain vehicles because it didn't have the blue oval badges that go on them. In another example of how supply chain challenges have hit automakers. No, that is an example of how Ford sucks ass. Tommy Hayes, interesting observation. You love how certain streamers are only on during really bad days. Straight perfection. You wonder how many shares of GME do I have? Negative. Negative number. I still have to cover. The Dixie, are you saying the Dixie wrecked? But Tommy Hayes, I don't know if that's the case or not about streamers being on or off. I will sit there and say, I love how on Reddit and VTards, there's certain people who will go away during any time the market's green. The second the market's red, they come back talking about their gains, and they come back talking about how they were right and bulls are wrong and all of that. It's okay. Here's the thing. I know you guys are going to laugh when I say this. I want to be associated with being centrist. I want to be associated with talking news, events, narratives, not with being associated with one side or the other. Mainly because this is my job now. I need both bears and bulls to come by. If I'm just associated with bulls, well, the market goes down, then my port may not be happy, but I'm also not making money doing my actual job. That's the issue. So I'm always stuck around. People know where to find me. You know, I'll point out then when all of a sudden the bears then like to come by on a bad day, be like, hey, Jay, or, you know, I bet you're hurting. I bet it's like, you motherfuckers know I'm here. I have to be. This is my job. And it's always the people who aren't subscribers either. They don't give me any money. Spencer, hot take. A strong centrist will win the next election. That's kind of hot. Kind of like it, though. B-Hood. Centrism is dead, Jay. Hasn't the last decade taught you anything, old man? Damn it, B-Hood. Fuck off. You're not wrong. An extreme centrist. See, I have a lot more respect for straight perfection. I know straight perfection and I have different viewpoints on certain political aspects. That's fine. By the way, there's a lot of aspects I think you and I actually agree on. I just don't overtly talk about it. But notice something. Straight perfection's been around for a while, and I respect that. Like, that's something that's appreciable. Straight perfection's the type of motherfucker. Him and I could have beers and say motherfucker to each other. Okay? It's a good sign. I'm the most centrist. If you're not a centrist, it's me. Fuck you. Motherfucker Jay. See? Yeah. Yeah. You guys should have realized when Windmaster went for the Bulls, that should have been your dead giveaway. Dark Brandon president for life. No beer. I'll have a beer afterward. Extreme centrism is just a less woke, moderate Dem. Yeah, but you could also say it could be a conservative. I think people have like forgotten like what conservatism can actually like be. Okay? Conservatism doesn't mean you don't like these certain things. It just means you're acknowledging maybe the central government's not the one to make it happen. You always have local governments, right? Yeah, Spy's kind of fucking still red on the day. Dark Brandon. I'm very pro-gun. That's always been the case. Shit. All right, folks. Ding, 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 ding. 368. 368. The points. The points, the points, the points. It's time for the points. Oh, and look. Lopsided. Yeah, most of y'all were sour. Yeah. Yeah, I'm giving the powers. Legalize recreational McNukes. What the fuck? Speaking of beers. What's this? No, I can't. Hold on. Oh, boy. Bitch better have my money. 52-week low rejected. Yep. So, caffeine, if you're not trying to provoke allergic responses to your Tinder dates, are you going to join us tonight for Goose Goose Duck, or are you going to keep being a bitch? Hmm? Hmm? You enjoyed the fire sale today? I bought some air. I think today was the day. Like, when we see a day like today, you kind of got to do some buying. But what's the narrative, guys? Was this us testing the lows and bouncing? Is that what we're going to say next week? Keep in mind, next week is supposed to be bearish. It's supposed to be bearish. However, next Friday could get spicy. PCE, end of quarter, end of month. Jack Cat, goddamn, I respect you. See, because of the seasonality, Seasonality is the issue. Supposedly, like, next week's like the worst week, like, in the fucking, like, calendar. I think history. The narrative is that you think institutions saw the 200-day and it triggered a lot of buying. Interesting. Black Raven, you still see us going down? We could. We could. Nothing would surprise, but was it Andrew Yang? He's a dumbass. You think this was shorts covering? At the end of the day, almost certainly yes. You loaded up on SPXL before close? You're fine. Maybe. Maybe. Net seasonality based on rebalance, and we'll go the other way now that bonds are dumped. Ooh, that's an interesting idea. I don't know. That's where I turn to Windmaster. Windmaster helps. He's my macro whisperer. Yeah. I'm the entertaining, funny guy. He's the smart one. Oh, CDAW, dude, yeah. Imagine if the war ends before Monday. Holy shit. Bear's gonna be silent as the dead. Yep, Kramer rule number 1, correct. Fridays are for short covering and bear rallies. That's correct. It's Kramerism. Raising Keens, you bought Qualcomm, Meta, and Netflix in June on basically the equivalent of today. You're basically flat and set on those. Seems like downside is limited for buyers here. As long as you're not in short-term stuff, sounds about right. By the way, guys, heads up on Netflix in particular. Netflix, in the next 2 weeks or so, we should find out if they were, like, what, supposedly their effort to get 65 CPM, okay, cost per milli the French term for 1,000, so basically cost per 1,000 impressions. It's the rate at which they're trying to secure ads. And if next week or the following week, if there's any reports that suggests Netflix is finding an audience at that high of a price point, that stock is going up. It's got a catalyst. If they fail, that stock's going down. So keep an eye on Netflix. That's what I would say. Raising Kids, if they get that, you'll be shocked. Well, yeah, because it's a lot. Daddy Long Calls, love the name. Does Netflix have unique information on their users? First of all, yes, but anyway. Why would advertisers pay more? That's the question. Like, what's the value proposition of Netflix? If they're, for example, only going to show an unskippable ad at the beginning and say end of, like, a movie or something like that, they may have a unique kind of, like, it almost like theater ads. And it may be for a very specific niche, i.e., maybe, like, sellers of computers aren't going to put out ads, but maybe sellers of TV shows, sports, movies find it very useful, and maybe it goes. I don't know. Your kids are going to shit if ads come on during Peppa Pig. Yeah. But yeah, Netflix does have unique information on the users. They already have a lot of data on you. Someone who's worked at APS, it's asinine. No way. Lots of people will disconnect Netflix if they introduce ads. We'll see. Either way, guys, supposedly they were targeting 65 CPM, cost per milli, so it's cost per 1,000 impressions. And yeah, always remember, guys, when we talk about ads for Netflix, this is for a new tier. If you already pay for Netflix, you will not see ads. It's okay. Friendly minion. Holy shit. Haunt, and a death rattle, and a dragon. All right. Oh, that's really good. You're not going to pay... Yeah, I wouldn't either. Oh, that's so sad. 3 hours later. Thanks for watching my stream, everyone. Viewers 0. Oh, that would suck. The Black Swan of Putin getting replaced this weekend seems more likely. I can only get so erect, B-Hood. America wins again. Nope. Today I bought shares of Air. That's it. That's all I bought. Google is trading at a 5.5% free cash flow yield right now. Raising Keens, I saw that too. And I've been over 100 consistently, yeah. If I ever dip below 100 for like a week on average, that's when I'd probably start taking the recruiters who reach out to me a little bit more seriously. Let's see how the rest of FinTwit is doing, or in this case, FinTwitch. Yeah, the business side is interesting. If the bear market ends, I agree. Just be like Jay Jared, he's doing 2 jobs. Ugh. You have to understand, the other job that I specifically do, they were never, no company would let me do this. Penny, I learned from him. Because he's like the first person to majorly talk about, what's it called? About, like politics and stuff. I can't watch him and listen to him for a while. I respect him. I just don't agree with what he's doing. Yeah, but I follow. Oh, good. Rita's getting a lot of people. Good for her. Now, Behood, the problem is with the jobs that I do, with the skill set I have, if a company knew that I would be just talking to hundreds of potential strangers, nope. Nope. Especially talking about stock stuff. Especially talking about stock stuff. It would be really bad. I don't want to put on Skrelly. I've heard some of you guys have been complaining about Skrelly, so. Yeah, I see Rita. I'm really happy. Fig, I agree. For my real job, wear a mask. Yeah. Would it be possible to do any consulting? Yes. Yes. The problem is that almost certainly, when companies, I'd have to sign a lot of, I'd have to sign like non-disclosures and shit like that. So I have to separate out what I talk about. Out of time, she made good points. Yeah, I like Rita. By the way, I will tell you right now, because she's pointing this out. Being bearish gets you fucking hate mail. And being a woman on Twitch gets you hate mail. So imagine being a woman bear during a bull market. She got some shit behind the scenes, which was bullshit. I thought it was bullshit. She got, yeah. People were far too comfortable with that stuff. Raid Martin, sure. Let's raid Mr. Shkreli. Hello. Is there a quick button to red? How do you raid for directly from this? Do I have to? They may not make it easy, huh? Yeah, my boomer ass. By the way, I'm going to be working on some of the interfaces and stuff over the weekend. Don't raid, Scrally. Eh. You hate Scrally. Fine, fuck it. We're not going to raid him. Let's raid Rita. I haven't raided Rita in a while, and I'm really happy to see she's back up and running. Yeah, absolutely. Well, I'm a big fan of Rita. Yeah, please keep the streaming going as long. I will, trust me. I'm looking at some other alternatives to extend it. Don't worry. I enjoy it. All right, let's see how our good friend Rita is doing. She has a nice audience, which makes me really happy. Anyway, guys, tonight's gaming night. If you're in the Discord server, join. We always shoot over the invites for Goose Goose Duck. Seriously, it's free. All you need is a microphone, a PC, and or cell phone, and or tablet. But it's like Among Us. We always play with a good group. We drink. No one takes it seriously. We're all laughing. It's a good group. So I'll catch you guys in the Discord, and otherwise, see you all next week. Peace out.